Mabibi na mabwana, naomba wote tusimame sasa tumkaribishe mgeni rasmi anaingia ukumbini. Tupige makofi tukimkaribisha mgeni rasmi. Makofi hayatoshi tafadhali, tuendelee kupiga makofi mgeni rasmi akiwa anajiandaa kukaa. Mgeni rasmi, karibu tuketi. Asanteni, tunaomba wote tuketi. Guest of honor, Honorable Dr. Mwigulu Nchemba, Minister of Finance. Distinguished leaders, Dr. Juma Akil, Permanent Secretary, President's Office, Finance and Planning, Revolutionary Government of Zanzibar. Mr. Elijah Mwandumbia, Deputy Permanent Secretary, Minister of Finance. Mr. Emmanuel Tutuba, Governor, Bank of Tanzania. Dr. Yamungu Kayandabila, the Deputy Governor, Economic and Financial Policies. Ms. Sauda Msemo, Deputy Governor, Financial Stability and Deepening. Mr. Rajesh Bansal, Chief Executive Officer, Reserve Bank of India, Innovation Hub. Mr. Matheus Rauber, Senior Advisor, Financial System Regulations Department, Central Bank of Brazil, who is joining us online despite the significant time difference. We truly appreciate your commitment, sir. Honorable guests of honor, we are also privileged to welcome the family of the late Gilman Rutihinda, led by Mrs. Josephine Rutihinda, who have traveled all the way from the United States of America to be with us today. Your presence is heartfelt, a reminder of the legacy we celebrate here today. Tuwapigie makofi tafadhali. Additionally, guests of honor, we acknowledge the presence of our esteemed Bank of Tanzania board members. We also acknowledge presence of the former governor, Professor Florence Luoga, who will join us shortly, and former deputy governors, Dr. Enos Bukuku and Mr. Juma Reli, who are here with us, and Mr. Lilam Kila, who is joining us online. Also, we acknowledge the presence of our esteemed discussants. Guest of honor, please allow me to acknowledge also the presence of the beneficiaries of Gilman Rutihinda Memorial Fund, the heads of commercial banks and financial institutions present here today, representatives from the ministries, governments, institutions, international and social organizations, academicians, researchers, students, and of course, our dedicated management and staff from the Bank of Tanzania. We truly appreciate your presence and time and engagement in this important event. Honorable guests of honor, ladies and gentlemen, ninawasalimu kwa jina la Jamhuri ya Muungano wa Tanzania. Ninawasalimu kwa jina la Jamhuri ya Muungano wa Tanzania. It is my pleasure to welcome you all to the 9th Gilman Rutihinda Memorial Lecture, a platform where we honor the remarkable contributions of the late Gilman Rutihinda while engaging in a critical discussion that shaped the future of our financial sector. This year's theme, driving the shift towards Cash-Lite Economy, opportunities for financial innovation and inclusion, could not be more relevant in today's digital age. As financial systems across the world evolve, Tanzania is also making significant strides towards digital financial transformations. Honorable guests of honor, over the next few hours, our esteemed speakers will share invaluable insights, innovative strategies, and forward-thinking recommendations on this crucial topic. It is my pleasure now to invite Dr. Yamungu Kayandabila, the Deputy Governor, Economic and Financial Policies at the Bank of Tanzania, to deliver the introduction remarks. Following this, Mr. Emmanuel Tutuba, the Governor, Bank of Tanzania, will offer his welcoming remarks. before inviting our guest of honor, Dr. Mwigulu Nchemba, Minister of Finance, to officially open this important event. Please put your hands together for Dr. Kayandabila as he approaches the podium. Welcome, Dr. Kayandabila.
Jamhuri ya Muungano wa Tanzania. To our chief guest, Dr. Mwigulu Lameck Nchemba, Minister for Finance, the United Republic of Tanzania, Mr. Emmanuel Tutuba, our Governor, Bank of Tanzania, Honorable Permanent Secretaries present. I see my brother, Dr. Akil, who doubles as member of our board too at the Bank of Tanzania. Our guest speakers and panelists, Mr. Rajesh, Board of Directors and former members of EO at the Bank of Tanzania. Mama Josephina Rutihinda and the family, heads and representatives of financial institutions, stakeholders from the private sector, distinguished guests, members of press present, ladies and gentlemen, good morning once again, and a warm welcome to our 9th Gilman Rutihinda Memorial Lecture. It is both a privilege and honor to stand before you this morning as we celebrate the enduring legacy of our visionary governor, whose transformative reforms continue to shape the trajectory of our financial landscape. This lecture, Guest of Honor, serves as a testament to his profound impact and reminder of the work that still lies ahead. First and foremost, I would like to extend my heartfelt gratitude to the Honorable Minister, Honorable Mwigulu Lameck Nchemba, for gracing this occasion with your presence. Your support for this traditional initiative underscores the government commitment to financial innovation and reform. We also extend our sincere appreciation to all senior government officials, financial sector leaders, and distinguished participants gathered here. To those joining us virtually, your engagement is equally valued and essential to the success of today's discourse. This lecture series stands as a tribute to the late Governor Gilman Rutihinda, whose leadership efforts in financial sector and market-driven policies laid the foundation for the progress we witness today. By continuing this tradition, we not only honor his memory, but also reaffirm our commitment to fostering meaningful dialogue that drives innovation within our financial systems. The diverse expertise present in this room, spanning from policymakers, private sector innovators, and financial experts, ensures that today's discussions will be both pragmatic and forward-looking. It is through this synergy of vision and execution that we can navigate complex transitions, such as the shift towards a cash-lite economy. We hope by the conclusion of today's lecture that each participant will leave with a deeper understanding of the challenges and the opportunities inherent in transitioning to a cash-lite economy. I bet you can expect actionable insight on critical areas such as policy frameworks, technological adoption, digital literacy enhancement, and cyber security measures. All these elements are indispensable for ensuring a seamless and successful transition that benefits all stakeholders. With these remarks, ladies and gentlemen, it is now my distinct honor to invite Mr. Emmanuel Stuba, our governor of the Bank of Tanzania, to deliver his welcoming remarks. Following his address, he will also introduce our chief guest, the Honorable Minister, Dr. Nchemba, who will deliver the official speech. Ladies and gentlemen, please join me in welcoming Governor Stuba. Thank you.
Thank you very much, Deputy Governor, my brother, Dr. Kandabira, for welcoming here to this podium. Honorable Chief Guest, Dr. Mwigulu Lameck Nchemba, who is also our Minister for Finance, the United Republic of Tanzania, and our permanent secretaries who are present here with us today, my brother, Dr. Mwamwaja, Commissioner for Financial Development in the Ministry of Finance, Deputy Governors, dear speakers, including my brother, Mr. Rajesh, who has traveled all along from India in order to give his experiences in this Cash-Lite. Heads of and the representatives of financial institutions who are present with us here today, Madam Josephine Rutihinda, thank you very much for managing to travel all along the way and be with us here. So you are warmly welcome. Board members of the Central Bank Tanzania, have seen other board members are here with us. Retired governor and the deputy governors of the Bank of Tanzania, members of executive office, and my colleagues from the Bank of Tanzania and the other financial institutions and the bank's fraternity, distinguished guests, ladies and gentlemen, a very good morning to you all. I stand here today with a sincere and profound gratitude in my heart as I welcome you all to the 9th Gilman Rutihinda Memorial Lecture. I thank you very much for allocating your precious time to attend this lecture as we invited you. Otherwise, we would have either probably remained here alone. Particularly, let me take this opportunity to thank you, Honorable Minister for Finance, Dr. Mwigulu Lameck Nchemba, for accepting our invitation and reserving your tight schedule in order to be with us to embrace the legacy that has been left by the late Governor Rutihinda. We are deeply honored to welcome your esteemed guest speakers, my brother Rajesh Bansal, the CEO of the Reserve Bank of Innovation Hub of India, together with Mr. Matheus Rauber, the senior advisor to the Financial System Regulation Department of the Central Bank of Brazil, who will join us virtually. Please just feel free and feel at home here in Tanzania, because you told me, my brother Rajesh, that you have been here for a number of years and several times, and you was among the advisors of the government when we introduced the national ID. So based on the theme of this year, I think you are among the instrumental people who will give us good advice and on how we can transform our digital services into the financial sector in Tanzania. With nearly 3 decades of global experiences, Mr. Bansal, who is here with us today, has been instrumental in India's transformation to a Cash-Lite economy. His expertise in driving financial inclusion and technological innovations align perfectly with today's theme. Also, Mr. Rauber, who will join us virtually from Brazil, is a leading expert in the fintech regulation and open finance, and has played a pivotal role in Brazilians' efforts to enhance transparency, competition, and consumer empowerment through regulatory sandboxes and modern payment systems. Together, their insights will bring valuable contributions as Tanzania navigates toward a Cash-Lite economy. We are grateful for their time and dedication to this important cause. It is also a great privilege to have our distinguished discussants with us today. We have Dr. Charles Mwamaja, Mr. Firas Ahmed, Mr. Tony Misokia, Mr. Mohamed Mashaka, and Mr. Jesse Jackson. These experts bring diverse participation and a deep knowledge in areas ranging from policy formulation to digital innovations, making them ideal contributions in today's discussions. We extend our heartfelt gratitude to each of you for accepting our invitation to contribute our experts and experiences in this significant event. Your participation reflects a collaborative spirit which is needed to drive meaningful change in our financial sector landscape. So thank you all for supporting and accepting to be with us in this important event. Moreover, we are sincerely grateful to be afforded with the presence of Mama Josephine Rutihinda, the wife of the late former Governor Gilman Rutihinda, accompanied by some of her family members. It is a pleasure to have you with us here today. And without you, probably the lecture would have been meaningful. But we really recognize your presence, and we remain committed to continue collaborating with you in order to honor the good work that was done by the late Gilman Rutihinda. Honorable Minister, invited guests, ladies and gentlemen, this lecture not only pays a tribute to the remarkable contribution of the late former governor of the Bank of Tanzania, Mr. Gilman Rutihinda, but also provides us with an opportunity to scrutinize critical matters that influence our financial landscape and our shared future. Today, we come together to discuss a theme that resonates strong with the changing dynamics of our financial ecosystem, which touches on driving the shift toward a cash-lite economy, opportunities for financial innovation and inclusion. Like in many countries around the world, our country has embraced technological advancements and the domestication of different innovations, compelling us to rethink how financial services are delivered to the public. The transition from cash-based to a cash-lite economy is no longer a matter of preference. It is an economic necessity. This transformation holds immense potential to enhance financial resilience, stability, and inclusivity. Reducing our reliance on physical cash will increase efficiency, improve transparency, and expand financial access, particularly for the underserved communities. More broadly, this shift will strengthen our ability to navigate emerging challenges in increasing digital world. Ladies and gentlemen, the transition toward a cash-lite system represents far more than a mere technological shift. It embeds a profound and transformative journey toward a more inclusive and resilient financial ecosystem. By embracing digital solutions, we will unlock vast opportunities for financial innovation, making it easier for individuals and businesses to access and utilize financial services. This is particularly crucial for groups that are historically excluded from the formal financial systems, such as women, youth, and the rural communities. I remember 2 years ago when we undertook a fiscal study, we realized that the adult population who were by then in 2023 have access and using formal financial services were to about 76%. And in this regard, we realized that we had 5 groups of people who seemed to be financially excluded. And these were youth, especially under 18 years. We had a group of women. We had a group of smallholder farmers, fishers, and the people with disability. So you can see that despite that we are continuing to provide services to all the adult population in the country, but still there are some places where some of our colleagues cannot access or use financial services. Now, digital platforms providing entrepreneurial with easing access to credit, while fintech innovations are opening new frontiers for economic participation. So our financial sector has already made a significant stride, driven by mobile money, digital wallets, and financial solutions tailored to local needs. These advancements have not have not only streamlined transactions, but also have contributed to a more secure, transparent, and efficient financial environment. The success of mobile money, for example, has transformed how individuals and businesses can transact, has also strengthened financial inclusion and foster economic empowerment. I remember there's a time when we had a discussion with our colleagues, and we found that M-Pesa was born here in Tanzania. However, currently has been more famous in other jurisdictions. 2 days ago, I had a discussion with the Tanzania Bankers Association, and I told them that according to our FinScope study, we saw that about 76% of Tanzanian adult population have access to formal financial services, and out of that figure, banking services accounts for only 22%, which means about 54% of the adult population have been reached out due to mobile money services. However, even through those who are using banking services, currently they are comfortable, especially when the central bank introduced the Tanzania Instant Payment System, famously known as TIPS, which now can integrate and facilitate transactions from bank accounts to mobile wallets, and simplify some transactions to other customers or other payments, including taxes, because TIPS has also been integrated with GEPG, which is a government electronic payment gateway. And by doing so, you can see the way this digital platform has simplified our life. However, full realization of the benefits of the Cash-Lite economy requires coordinated and collaborative efforts. Government agencies, financial institutions, technology providers, and the civil society must work together to establish a regulatory and operational framework that foster innovation in low-cost digital financial services while ensuring consumer protection, cybersecurity, and regulatory compliance. Strong partnerships and policy coordination will be critical to ensuring that these transactions are both sustainable and inclusive, setting the stage for a more dynamic and resilient financial future. Ladies and gentlemen, as we advance toward a Cash-Lite economy, it is essential to recognize that technological innovation alone is not enough. Its true impact lies in its ability to drive financial inclusion, a cornerstone in our fight against poverty and inequality. Expanding access to affordable financial services empowers citizens to invest in their futures, establish businesses, and contribute meaningfully to economic growth. Achieving true financial inclusion is a Cash-Lite economy which requires more than just technological advancements. It demands targeted efforts to ensure that marginalized and underserved populations are not left behind. To bridge this gap, we must design innovative financial products and services that cater to the unique needs of our communities, ensuring that benefits of the digital transformation are accessible to all. In this endeavor, collaboration with the microfinance institutions, cooperatives, and the community-based organizations will be crucial in reaching the embarked and integrated with them into the financial system. Such a partnership will ensure that no one is left behind as we navigate this transformative journey to ensure that all the people are saved by using the digital platforms. Honorable Minister, invited guests, ladies and gentlemen, as we honor the legacy of the late Gilman Rutihinda, let us draw inspiration from his progressive philosophy and unwavering commitment to innovation. Transforming to a cash-lite economy demands resilience and unwavering focus on inclusivity. It calls for critical thinking, strategic planning, and coordinated actions from all stakeholders. Together, we can build a financial architecture that not only spurs economic progress, but also promotes social equity and inclusion. I thank you for your kind attention and look forward to engaging in a thorough and provoking discussions during today's session. As we chatter to the cause of tomorrow, let us also do so with the hope that imagination and the shared commitment to build as Tanzanians where every citizen has the opportunity to thrive. I hope during the course of discussion, we'll get more time to brainstorm and share experiences from different countries, and even on our side, who have been using different platforms here in Tanzania, you'll get maybe enough time to share your experiences as you continue to contribute after the presentation. With these remarks, ladies and gentlemen, it is now my pleasure to request the Honorable Minister for Finance, Dr. Mwigulu Lameck Nchemba, to deliver your speech and also officially open the 9th Gilman Rutihinda Memorial Lecture. Your Honorable Minister, you are warmly welcome to the podium. Asante sana kwa kunisikiliza.
Good morning to you all. I was wondering whether this stairs is meant for all. Yeah, at least. Yeah, my brother Emmanuel Tutuba, Governor for the Bank of Tanzania, permanent secretaries here present, taking note of my brother Dr. Akil, guest speakers and the panelists, the high table, members of the board of directors, and former members of the executive office of the Bank of Tanzania. I see the former governor, the former deputy governors, and seriously, you have to allow me to give them the respect. Shikamo Mwalimu, Dr. Bukuku, Professor, and Shikamo Boss, Dr. Eli. Every time I see Dr. Bukuku, I remember the series of lectures at the University of Dar es Salaam. We enjoyed your lectures. You are so friendly and practical. Really appreciate it. And every time I see my boss, who actually discourages me to call him my boss, Jumareli, I remember how I got into the Bank of Tanzania. Just in a nutshell, when I was running out of the boom at the University of Dar es Salaam, I saw the advert. They were looking for economists with experience of at least 3 years serving in a research institution or an academic institution. Seriously, I realized I was not qualifying with that one. But I was discussing with my wife when, as I said, the boom was running out of our pocket, and say, look, you just apply. Leave the work of shortlisting for them. Don't apply and shortlist yourself. So I applied. After applying, I don't know why they decided like that. They thought maybe it is the principle, the baseline should be the written exam. So they invited, I don't know whether it was all, or I was privileged to be part of those who were invited for the written exam. So I was part of the shortlisted for the written exam. Because I was at school for continuously from secondary to master's level, I think I was good at writing than those who are in offices. So I wrote and was part of those who are shortlisted for the oral interview. Then I was invited. But upon attending the oral interview, I was surprised to be called the first. I did not find that was in the order of the alphabet, because my name is not A. Then upon arriving in the room, it was to my advantage. They just started telling me, look, we wanted to have those with 3 years experience. We have realized you are just in the level of writing your dissertation. You have not even graduated for your master's degree. Look, what should we do now for you? And they asked me. I said, for sure, it is true, I have not completed my master's. I'm now writing my dissertation. But should I give you one assurance? I'm going to pass. It's a matter of time, and come October, I will be through with my graduation. I will be through with my dissertation, and I will be through with my graduation. And then Jumarel was one of the person, the Pilato, was the one who was asked what is the ultimate action should we do to this young boy. He was asked, should we interview or we allow him to go? He said, let us interview him. And I was not aware why were they asking him, because they did not introduce themselves. So he said, let us interview him. And then they started interviewing. The interview concentrated much on the dissertation, on the thesis, to every candidate. Actually, they were asking me questions on the dissertation, which has tortured me in the past 5 months. I've been taken several times by my supervisors. I write it, and it comes, all pages are ready, like I have to rewrite afresh. And then they're asking me on those aspects. So they were doing the part which the supervisor has been doing in the past like 5 months. Something which I've been doing in the morning, in the afternoon, overnight. And then the questions were coming from there. And the very good thing, they did not introduce themselves. So it was like a seminar room because I was not aware to whom I was talking to. I was speaking like I'm teaching them. So after I've done that one, I remember it was Mama King said, by the way, we did not introduce ourselves. That was after the questions, after the whole questions. He said, after all, we did not introduce ourselves. Then I listened. I thought maybe they are my colleagues. And you know, as you see him even today, take him some 20 years maybe back. Is it 10 years? 206 and today, yeah, some good number of years. I was seeing them like my colleagues. Then they started introducing themselves. I realized that the deputy governor was there. The director for policy was there. The director for human resources and administration was there. But it was too late because I had enjoyed that atmosphere of not knowing to whom I'm talking to. At the end, I got the privilege of getting what transferred in the assessment. They say, look, this young boy is good. Sure, he has not completed his master's, but this boy is good. You could see the confidence, you could see what he wrote, you could see the way he explained these issues. Actually, the director for policy said, these are the issues I've been telling my economist at the director at the Department of that's the section of monetary research. Yes, this is what I've been telling them. But this boy has simply impressed me. I need him. Then they said, okay, so we award him the letter, but he has to report after completion of the dissertation and upon submitting the certificate after graduation. That one was too simple for me. You know, getting a letter, I was working with it, and you won't believe I still have that advert laminated in my records. I just wanted to tell you why I was saying Shikamo boss. So, ladies and gentlemen, I appreciate seeing the family of the late Governor Gilman Rutihinda. Gilman Rutihinda, I always say, you remember last year, and every time when I say, is the man whom I really wanted to be. I wanted to be Gilman Rutihinda. I every time tell you this one, and he shaped and reshaped my dreams. And every time I have wished to see all of the living dreams from this living legend being fulfilled. So it is an honor to me to officiate the 9th Gilman Rutihinda Memorial Lecture, which commemorates the vision of leadership of the late Gilman Rutihinda, who as a governor of the Bank of Tanzania, laid the foundations for the Tanzania's modern economy through financial sector liberalization and market-driven policies. His reforms fostered innovation, inclusivity, and sustainability by promoting competition, expanding access to financial sector services, and ensuring long-term stability. Today, as we embrace transitions toward a cash-lite economy, a shift that enhances efficiency, reduces cost, and broadens financial inclusion, we honor Rutihinda's legacy by advancing digital technologies and inclusive practices to empower underserved communities, rural areas, and marginalized groups. This lecture underscores his enduring influence and renews our commitment to building a more prosperous and equitable Tanzania. I extend my sincere gratitude to the Bank of Tanzania for organizing this lecture and maintaining this meaningful tradition. Please, Governor and your team, keep this one, keep it going, and keep it active every year without missing. I also recognize and appreciate the presence of the Rutihinda family. Your dedication and respect to this one is also commendable. Also, please keep this one active. I only missed one aspect among the things I had said at the time I was at studies, and I have not said. This is one I have not said. I was running away of questions. You know, I said, let me struggle and be the Gilman Rutihinda. I'm saying the Gilman Rutihinda because I sometimes feel shy to say the governor because the governor is here. By the way, we have been in different portfolios. So, Governor, you are safe. I'm not planning to. One other aspect, you know, I was saying, but it was at the time when I was very young, the secondary, you know, you dream a lot of issues. I was saying, if I will be blessed with a kid, a boy, I will name him Gilman. Yes, I'll name him Gilman. So Gilman is also in my heart, a boy. I appreciate you have every year been doing this. The other time I failed to participate physically, but I joined virtually. This one is a dedication. I've been discussing with my colleagues. I appreciate Dr. Mwamaja, you are around here. I discussed with the governor and the PST that we should see how we will also keep the fund active to include more students, like the way I benefited at the time I was at master's level. I was informed that it's continuing, but the changes in cost of higher level learning is in a way has been overtaking. But provided Her Excellency Dr. Samia Suluhu Hassan is funding various funds for accessing higher level education, including the Samia Fund and the others, it's time also to see how we multiply the sources to keep this fund active. So we have the fund and we'll have the lectures in memorial of the late Governor Gilman Rutihinda. Ladies and gentlemen, this year's theme, driving the shift toward a Cash-Lite Economy, opportunities for financial innovation and inclusion, not only honors the late governor's forward thinking, but also mirrors our nation's urgent priorities. Today, as we confront evolving global and domestic challenges, this theme demands that we harness innovation to build a resilient and inclusive economy, one that empowers every citizen. These priorities are embodied in various national initiatives, including the National Financial Inclusion Framework 3, which targets expanding formal financial access to at least one of the formal financial services, at least to 95% of adult Tanzanians by 2028. A commitment to empower women, youth, and the rural entrepreneurs with a tool to save, invest, and thrive. Also, the Tanzanian Digital Economy Strategic Framework 2024-2034, designed to position Tanzania as a regional digital powerhouse by promoting a resilient, dynamic, and inclusive digital economy that supports and uplifts every individual. Building on these ambitions, the government is actively implementing a range of strategic initiatives to accelerate the transition toward a Cash-Lite economy. A key example is the expansion of the national ICT broadband backbone, which now covers about over 70% of the districts nationwide, coupled with the significant reduction in communication infrastructure fees from around $1,000 to $200 per kilometer. These measures have substantially enhanced connectivity, even in remote areas, enabling the widespread adoption of digital payment systems. Such initiatives not only promote cashless transactions, but also integrate mobile money platforms, thereby advancing financial inclusion across the country. In parallel, the establishment of the Digital Technology Institute in Dodoma aligns with the digital skills pillar of the Digital Economy Strategic Framework, is equipping citizens with essential digital competencies. This initiative prepares individuals for the demands of digital workforce, fostering broad economic participation and empowering Tanzanians to thrive in a rapidly evolving economy. Furthermore, the government has been actively encouraging fintech innovations through public-private partnership, supporting the development of cutting-edge solutions. Complementing these efforts, the alignment of policies like the National ICT Policy 2024 with the regulatory sandboxes has created an enabling environment that nurtures a conducive ecosystem to Cash-Lite economy. Ladies and gentlemen, these initiatives are not isolated efforts, but interconnected drivers of Cash-Lite transformation. Transitions from physical cash reduces operational costs, enhances transaction efficiency, and expands financial inclusion, particularly for rural and low-income populations. Innovations like mobile banking and mobile money services simplifies progress and may best guess is the majority of the used modality in the present year, and we have used this non-cash payment method as one in a time. However, widespread adoptions remains a challenge, particularly among low-income segments, due to transaction fees and associated costs. According to the 2023 FinScope surveys, 89% of adults of Tanzanians continue to use a cash for payment of essential expenses such as groceries, school fees, medical treatment, and rent. In contrast, only 6% of the adult population receives their income through bank accounts. This persistent reliance on cash underscores the need to develop and promote digital payments that are both affordable and accessible. A priority that the Bank of Tanzania and all stakeholders must continue to champion, building on the foundation of the existing initiatives like the Tanzania Instant Payment System, what the Governor of the Bank of Tanzania earlier on has said, which are thoughtfully designed to tackle these hurdles by enabling low-income, low-cost and real-time transaction. And however, it is evident that further efforts are required to fully realize the inclusive potential of Cash-Lite economy. ladies and gentlemen, the shift to Cash-Lite economy is more than just a technological, and it is strategic economic imperative for economic transformation toward greater productivity, accountability, and the equity as a foundation of the economic principles. This shift unlocks new opportunities for enhancing financial inclusion and boosting growth by streamlining payment systems and expanding access to digital financial services to everyone. Success, however, demands collaboration among policymakers, financial institutions, and civil society. Policymakers must fortify digital infrastructure, financial institutions must innovate inclusively, and civil societies must bridge literacy gaps. Key areas of focus must include cybersecurity, affordability, and the consumer protection, ensuring no one is left behind in this transformative journey. In this regard, I call upon all our esteemed discussants to explore concrete strategies that will accelerate Tanzanians' journey toward Cash-Lite economy. How can we reduce the size of informal sector? How can we lower transaction costs to encourage greater participation? What measures are needed to enhance digital literacy and build the trust in digital financial systems? And how do we strike a balance between promoting widespread adoption and ensuring robust cyber security? Your insights will be instrumental in shaping the policies and strategies that will define our collective progress. Distinguished guests, ladies and gentlemen, I want to reassure you that the government is fully committed in supporting this transition. As you may recall, several times, Her Excellency Dr. Samia Suluhu Hassan has insisted on these issues almost in every time when we are discussing issues related to these digital economy platforms. Our effort is in collaboration with the Bank of Tanzania and other stakeholders are focused on creating a robust policy and regulatory framework that promotes innovation while protecting consumers and ensuring inclusivity. As we engage with today's lecture and discussions, I'm confident that the insights to be shared by our esteemed guest speakers, panelists, and participants will illuminate pathways to strengthen Tanzania's journey toward all Cash-Lite economy, and together we can build a financial system that not only enhances efficiency, but also uplifts the lives of all Tanzanians. With that, distinguished guests, I'm honored to officially declare that the 9th Gilman Rutihinda Memorial Lecture is now open. Asanteni sana kwa kunisikiliza. Niwatakie mfungo mwema wa mwezi mtukufu wa Ramadhan pamoja na Kwaresma. Asanteni sana.
Another big round of applause for the guest of honor. Honorable guest of honor, thank you very much for officiating this event. It is evident that through you and many other beneficiaries of the Gilman Rutihinda Fund, the spirit of the late Gilman Rutihinda continues to live on. A round of applause for the guest of honor as he pays respect to the family of the Gilman Thank you very much, Honorable Guest of Honor. Honorable Guest of Honor, may you please allow us to stand for 1 minute in respect of the late Gilman Rutihinda, who passed on while in service as the Governor of the Bank of Tanzania in June 1993. A minute of silence in remembrance. Thank you, Honorable Guest of Honor. As we now continue with the program, it is now time for group photo. The high table will proceed outside. The area for group photo is arranged just outside of this venue. And I will read the groups that will go for group photo as the high table is already seated. Karibu sana meza kuu kwa ajili ya kwenda kwa group photo. Group itakayofuata kwa ajili ya group photo ni board members. Ninaomba wote tupite mlango huu wa kulia tukienda kwenye group photo, na tutakaporudi tutapita upande wa kushoto. Board members, karibuni sana kwa ajili ya group photo. Watakaofuata baada ya board members ni viongozi wa zamani wa Benki Kuu ya Tanzania wakiongozwa na Governor wa zamani Professor Florence Luoga, Deputy Governor wa zamani Dr. Enos Bukuku na Mr. Jumareli. Karibuni kwa ajili ya group photo baada ya board members. Unaweza mkaenda moja kwa moja sasa hivi kwa sababu akimaliza tu wata discussants mtafuatia baada ya former executive officers. Tutapita mlango wa kulia na tutatoka kwa kupitia, tutakapokuwa tunaingia tutaingia kwa mlango wa kushoto. Rutihinda family, tunaomba mjiandae kwa ajili ya kwenda kwenye group photo. Karibuni sana. Wakati Rutihinda family wanajiandaa kwenda kwenye group photo, tunaomba heads of commercial banks and financial institutions tujiandae. Heads of commercial banks na financial institutions, naomba tujiandae kwa ajili ya group photo. Tuharakishe kidogo kwa sababu ya muda. Tunaomba discussants warudi mbele kuja kukaa kwenye meza kuu kwa ajili ya panel discussion. All the discussants, please to come to the high table so that we can proceed with the panel discussion. The discussants, please to come forward. Sit at the high table. Thank you. Mheshimiwa Mwenyekiti, mabibi na mabwana, karibuni kwa ajili ya session ya pili. Chairperson, ladies and gentlemen, welcome for the second session. I would like now to welcome on the stage Mr. Kennedy Komba, who is the Director, Financial Deepening and Inclusion at the Bank of Tanzania, to moderate the second session. Welcome, Mr. Komba.
Thank you so much, Beatrice, MC today. A round of applause for Beatrice. She has done a great job. Thank you. Chairperson, we are now moving, as Beatrice pointed to us, on the lectures. And I just thought I should I'm told to do two things. First, to introduce these entire lectures and also to introduce the topic and the speakers. I'll start just giving you the modality of how we are going to manage these lectures. We'll start with two keynote speakers. The first keynote speaker will be from India, Mr. Rajesh Bansal, who is here. A round of applause to him. He's at the corner there. We'll also have our colleague Matheus Rauber from Brazil, Central Bank of Brazil. He's already online, but he will join us as soon as we complete the lecture from Rajesh. And then after that, we'll move directly to a panel discussion. And my panelists are here. I'll introduce them at the right time. And subsequent to that, we'll have questions and answers, discussions, and then we'll be going on to the concluding remarks. To start with, in terms of introduction, I think first and foremost, we'll all agree with me that the speeches by the Honorable Minister of Finance and Governor did lay the foundation for what we are going to discuss on this topic of transitioning to Cash-Lite and the opportunities that bring to financial inclusion and innovation in the country. We have had the excellent work that the government is currently doing and pursuing in terms of building blocks of digitization in the country, but we are left with the house to scale, the house to further expand the strategic implications that has to do with digitization in the country. And those questions that we have, I'm pleased to let you know that they will be kind of answered by the international experience, but also the market experience that we have. In terms of the Gilman Rutihinda Memorial Lectures, these are a biannual event that the Bank of Tanzania does conduct, and this is to honor the late Gilman Rutihinda, the third governor of the Bank of Tanzania, who was in office from 1988 to 1993. And we do this to recognize the exceptional contributions that he made to the country's economic policy and development. These lectures are essential platform for public policy scholars and private sector who engage to discuss critical economic issues, and we've been doing this since June 1995. And we are happy that you've been able to make it here. And therefore, this high-level event provides invaluable opportunities for thought leadership. It provides opportunities to discuss prevailing and current issues, and more so during this time when we have a lot of economic headwinds. The objectives that we want to cover up in this event are three. One is to ensure that we drive insights and policies that support the economic transformation of Tanzania. Two is to promote collaboration and cross-sectional engagement within our own market with different players, academia, practitioners, regulators, policymakers, but as well as the partners from across the continent. And finally, is to strengthen the position of Tanzania and the Bank of Tanzania as a thought leader, but also an entity that drives not only for the region, but across the world when it comes to economic development, issues to do with supervision, stability, and inclusiveness. And to do this, we'll make sure that we come out with specific resolutions from this meeting, which we'll be tracking them, following them through up to the next forum. But in between, they will help us to move Tanzania to the next level when it comes to digitization. Now I'll introduce the first lecture. And Mr. Rajesh is a CEO of the Reserve Bank of India Innovation Hub. Mr. Rajesh, I won't read his CV for sake of time, but I believe you all have it in the program. But Mr. Rajesh has vast experience when it comes to digitization. He has been instrumental. He's been, I think, the first CEO of this innovation hub. He has worked tirelessly to come up with specific innovations that are driving India economy. But so much, just to add 2 points for India. We know that India is the third digitized country in the world. And they've done this within a very short span of time. For those who are following India economy, you know what they have done. And Mr. Rajesh is among those brains behind the digitization in India. A round of applause to Rajesh, please. We are honored to have Rajesh, who did provide a lot of advice to our country in terms of NIDA, but he also engaged with the central bank, other colleagues. We had a former director of payment system that also had engagement with Rajesh and other colleagues, and in different space that we've been engaging with him. So we know his insight, practical experience, simplicity of actions, but more so how India made it the way they made it is what we're going to hear from him. Allow me, ladies and gentlemen, now to allow Mr. Rajesh to come to the podium and take the presentation. You'll be having 25 minutes, sir. Welcome.
Very good morning, everyone. I hope I'm audible. Yeah. So, habari is Asuboi. I hope I got it right. So I have been practicing so that I don't make a mess of it. So very good morning, everyone. It's my pleasure and an honor to be invited for the 9th Gilman Rutihinda Memorial Lecture and to have the privilege to speak to all of you. Thank you so much to the Governor for inviting me. And, esteemed Deputy Governors, CEOs of banks, and other esteemed speakers, thank you so much for being here. So as Kennedy, and thank you Kennedy for introducing me, I've tried to play a role in India, and let's see, I'll take you through India's journey from the digital transformation, especially in the last 15 years. So as you would see the numbers are themselves prove that from 35% people banked in 2011 to 80% in 2024. And, internet growth 250 million to 969 million. We are a country of about 1.3 billion people. So there are too many of us, and we passed not a very proudest moment last year as the most populous country in the world. So there are too many of us, so it's about, or nearly all adults have 9 connections. UPI, the instant payment system, I'll talk about, started in 2016, and today we do 280 billion worth of transactions just in 1 month. And fintech unicorns, 2012, we hardly had any, and now 25 fintech unicorns. I'll tell you the story of how we got here, and still a lot that remains to be done in India. In G20, there was a lot of talk about India and DPI. Yes, we are getting there, but honestly, we are learning from all of you how to improve. Sorry, Kennedy. Where do I point this? Yeah, okay. Yeah. Building India's digital public infrastructure. Basically, we went about by 3 important layers. That is a digital identity layer, which I'll talk about, the payments layer, and the data layer, how data, as we get more and more digital, as the global south becomes more and more digital, we might not be in the global south income rich, but gradually all of us are data rich. And how do we leverage data basis consent, and some of the examples I'll talk about, how we have been able to achieve this and how in the global south some of it could be adopted. This DPI approach, as you know, the digital public infrastructure is underpinned by 3 pillars, and by design, collect minimal data. And I would like to emphasize that India's digital ID, as I will go about explaining to you, we started in 2010. We decided that the number of data fields that we'll collect will be minimal. How minimal? We started with 20 as a founding team. I know we would be in whole day discussions, how many data fields to connect. We came to a situation where it is like must have data fields, and we ended up with only 4 demographic data fields. I'll talk to you about it. And data can only be used with consent. Data is not owned by the government or the national ID. The data is that of the citizen, and it can only be used by consent. This is some of the other pillars. And data is federated. So there is no one place where linked to the national ID, we know how much income you make, how much taxes you pay, what car you have. As of now, the data is very federated. And access to data is definitely regulated. I'll give you examples of that. Why a digital public infrastructure? See, go back to 2009 when the government of India decided to set up a national ID, which is the foundational layer of what we see in India today. About 40% of people in India did not have a birth certificate. Unfortunately, I don't have a birth certificate. I don't know, my dad, I think, never bothered to get me a birth certificate. Although by the time I was born, birth certificate was being introduced. And in India, most of the people of my generation, the proof of date of birth is my class 10 standard passing certificate. When I joined here, I realized we never thought about it. We just took it as granted that that's what the birth certificate is. Imagine people who never went to school, which means they didn't have a birth certificate. They could not prove who they are and when they were born. So these were some of the reasons why we decided. So, a digital public infrastructure, basically the core foundational layer on which private sector can innovate, ensure economies of scale. The government has control over critical infrastructure, on top of which frugal innovation can follow. The identity layer, I'm sure a lot of you heard about it. We started in 2010. We gave the first Aadhaar on September 28, 2010. And we said only 4 data fields, fingerprint and iris, 10 fingerprints and iris, and we set up a deduplication center. Basically, a 12-digit number was generated. Interesting part is, as I would dwell on it, as the Honorable Governor introduced, that I was advising NIDA for some time, about 8-9 years ago, in the early days. The fact is that we decided in India that only a number, the 12-digit number, which is a random number, no intelligence in it, becomes my default identity layer. And I can prove whom I am through an online basis. It was good to, when I was talking to the governor in the morning, the fact that, most of the villages in Tanzania are gradually getting covered by 3G or 4G. So we are at that stage where Tanzania, as I was telling the governor, it's set for takeoff. Major enablers are already being put in place by the central bank and the government of Tanzania. So this is what led to generation of a 12-digit number. And this number, there were, minimal data collection, single design, easy to execute. Because there are too many of us, what is the target we gave ourselves? Within 3 months, we will enroll 1 million people a day. We knew unless we set up this ambitious target, we'll never be able to achieve 1 billion. So we set up the target, and within 12 months of launching it, we were able to achieve 1 million enrollments and 1 million numbers generated a day. And I'll talk about DBT AEPS in a minute. So Aadhaar is just not an ID. Aadhaar in Hindi, the national language of India, means foundation. Foundation of a new beginning. And if you look at the symbol is a fingerprint with a rising sun. We had crowdsourced that symbol also and had announced a prize. So basically 1.3 billion Aadhaar generated, more than 95-97% of people have a national ID. About 90 million authentications happen per day, which means about 90 million times a day, people of India confirm this is who I am. The purpose could be bank account, insurance, getting a SIM card. The purpose could be getting a tax ID. The purpose could be anything. So there are hundreds of use cases, or the purpose is getting government transfers like TASAF, right? All of that is covered, and 22 billion eKYC has been done. eKYC basically means I can go to a bank or a SIM card location, give my 12-digit number, my fingerprint, and instantly an account is opened. That is allowed as per the regulations, telecom regulations, the financial sector regulations, and the best example I'll give you, one of the telecom companies, which was a challenger to Airtel, started sometime in 2016. Within 100 days, they issue 100 million SIM cards, thanks to the fact that digital ID existed and we were able to authenticate, confirm, instantly verified, a SIM card was issued. That's what we've been able to achieve. So it's a foundational layer, and how it led to increase in banking access. Two things happened. That when Prime Minister Modi took charge in 2014, his mission was that everybody should have a bank account. And basically the Pradhan Mantri Jan Dhan Yojana, Pradhan Mantri basically means the Prime Minister. Jan Dhan is basically accumulation of wealth. That is the initiative that was started. And zero balance accounts. So, Honorable Governor, this is one of the things, I was waiting for you and the Honorable Finance Minister to come in. that one of the regulatory things that we brought up is banks can open a zero balance account, which means that, yes, it's a bit costly, but using national IDs, KYC, the cost of opening an account can be reduced by 80 to 90%. That is possible, and regulation allowed that zero balance account was opened. Digital payments and direct benefit transfer is what it led to. So 550 million zero balance accounts have been opened so far, of which 306 million are opened for women. And as I heard the governor talk about the two important segments, women and youth, we had a similar problem in India. Youth below 18 especially, obviously did not have an ID. And I remember, as a founding team, we used to go to the field to understand why would somebody want an ID, right? Because if you are getting your way along, your life is okay, you don't need an ID. But the fact is that the youth, 15 to 18, was queuing up overnight to get the national ID because they realized, for us, this is the way, a pathway to proving who they are and future employment, SIM cards and everything. So they were the first bunch of people who launched. This also, sometimes is treated as a problem for the banking system. But our hypothesis was, as you open this account, the zero balance account, imagine the amount of deposits that have been brought in. About $29 billion worth of deposits have been garnered by the financial system or the banks in India in the last 8 to 9 years, thanks to the fact zero balance accounts were opened as people would want to keep the money in a bank. How the identity layer led to banking access using eKYC, and how the direct benefit transfer, the cash transfer, something like the TASAF equivalent, how it was implemented in India. So you should look at it, number 2. So Aadhaar eKYC is used to open an instant bank account. Then I go to a TASAF equivalent anywhere where I'm getting my social cash transfer, give my number to that agency. What happens? No more ghosts, no more duplicates. So we cleaned up the system, as we used to call it, cleaning up the audience tables. And we use the digital ID number as a payments address. Today, the way in mobile money you use mobile number as a payment address, we said, why do you need to give anything else? Just give your ID number, and using the intermediate layer of the payments bridge, I'll not go into details of that, you can receive money anywhere, anytime you want, and withdraw it through a micro ATM, what we call it. Basically, the way you and I can go to any ATM and withdraw money. We have enabled every individual in India spread across 700,000 villages to be able to withdraw their money through a small handheld device with a number and a fingerprint, and set up a truly interoperable agent network in the country. I remember 2011-12, we had 20,000 active agents of banks, and today we have 2 million agents that are active, all interoperable like the ATM network, right? So the problem that the direct benefit transfer, which was started by the government on 1st of January 2013, was delayed payments. This ensured instant payments into bank accounts. So last week, the Prime Minister paid about 100 million farmers an installment about $10. That installment was transferred 100 million. He pressed a button and money was transferred. During COVID time, and a lot of countries were struggling, we were fortunate that we had built this layer that the government of India was able to transfer money instantly. So delayed payments that were not happening, inaccurate targeting, this is not targeted. And then whether pilferage, so an interesting news to the Honorable Finance Minister that we have saved about $40 billion over the last 10 years because of implementing the direct benefit transfer. So it's good economics, good politics, good technology, all the complication at the back end. At the front end, the consumer needs nothing but their 12-digit number, and it becomes, a road to digital transformation. So withdrawals are made easy, as I said, through a truly interoperable network. treated like an ATM. You and I, if I have a Visa card, can go globally and withdraw money. Similarly, through the Aadhaar-enabled payment system, we set up an interoperable agent network. The central bank was very supportive. They allowed interoperability. And just so that I worked in sub-Saharan Africa, I want to make it clear what does interoperability mean. It means that if I am a bank agent, anybody who has a bank account with 100 other banks can come to me and withdraw money. So that's what interoperability true, as I said about ATMs. So all of that has happened, and about 5 billion approved transactions in the last financial year. And even, including in COVID, people were able to withdraw their money seamlessly thanks to the layers that we built. So this not just enables efficiency, not just enables efficiency in fund spending, it means ease for the consumer, ease for the citizens of the country. So I'm not going to, basically, is the key to mass adoption of digital transformation. Now the payments layer, as one of the most important theme of today, is transition from cash to Cash-Lite. In 2016, we set up what we call as a unified payment interface, UPI. It wasn't easy. It was an instant payment system. What is the big difference about it? Obviously, instant payment system, I was very happy to hear that TIPS has been launched in Tanzania. It is interoperable. One of the important things I want to emphasize on here is it allowed bank-to-bank transfer between me and Kennedy, but I would use a fintech app and he will use a fintech app to receive the money. So the underlying layer is bank account to bank account, but the third-party application provider, the TIP app, which means Amazon Pay, Google Pay, domestic phone pay, they are the ones who are hungry and they went out to the market to push and market this. So pardon my saying, because by default, banks do not consider payments as a business. By default, we as bankers have been trained to use other methods as income. But these fintechs basically focused, because of the model, it's a 6-party model, the way we build a unified payment interface. And that the volume transaction, as you can see, 16 billion a month. I mean, numbers are just indicative because there are a billion adults. About 40% of people in India use this. It's a mobile application based. The interesting news is, as I heard from the governor, is about 80 to 85% of Tanzanians already have a mobile wallet. So I was telling the governor that we are more primed than in India. So all the important pieces are already being built. The data layer. So this is an interesting. I have a DigiLocker app run by the Ministry of IT, and in that app, I can carry my tax ID, my national ID, my COVID vaccination certificate to anything and everything issued by a government agency, including a private agency, my driving license. All of that I carry on the digital app, digitally signed as per law, and makes life comfortable. When I enter an airport, I don't have to go through the hassle because I use a Digi Yatra app, which is based on DigiLocker. So as you can see, the number of documents issues in 9 billion documents and about 490 million registered users. So when COVID happened and vaccination happened, where a lot of other countries, including Madam Uno in the US, people were struggling to carry their COVID vaccination certificate. But luckily in India, we had found the layer, basic layer. So we are all carrying our vaccination certificate on my phone. So it made life much easier for citizens. We also set up an open finance ecosystem account aggregator, where 128 million accounts have been linked, and how you can share your banking and financial data to get a loan. It's an open finance architecture adopted by India. I'll not go into too much detail.
India's fast-growing economy is home to more unbanked people than any other country. Since 2009, India has added new pieces to its financial infrastructure. It has built 3 interconnected layers: a biometric identity database, simplified payments addressing, and market-wide digital payments interoperability. Together, called India Stack, these new layers have the potential to bring dramatic change. To see how it works, let's meet Seema, a garment worker who migrated to Bangalore from a rural region of Odisha. As a migrant, she does not have a permanent address, and banks often require multiple ID documents to open an account. In 2009, the Indian government created the Unique Identification Authority of India, which has enabled over 1 billion residents, including Seema, to easily obtain an identity number linked to their biometric data. Using only her identity number and biometrics, Seema can now open an account quickly. And the electronic identity allows financial service providers to instantly conduct KYC checks. A second layer of infrastructure allows Seema to link her identification number, phone number, and bank account number under a simplified payments address. This address can be easily shared with her employer to receive her salary digitally. The third layer is a market-wide interoperable payments system. Seema can now use her phone to send money instantly to her mother, who has also recently opened an account at a different provider. Her mother can withdraw the funds in rural Odisha using only her ID number and her fingerprints. 2 additional layers are being added: the digital locker, where people can securely upload digital copies of personal documents, such as academic records, vehicle registrations, or birth certificates. And a new system for e-consent, enabling people to selectively share their personal documents and data. These new layers would allow Seema to share her key financial documents to apply for a loan or access other services. Together, the layers form a new national infrastructure connecting business, government, and hundreds of millions of people like Seema to the financial system.
There's a video created by the World Bank arm of CGAP, which summed up everything. It will be opportune to. Now, after that, I just want to spend 5 more minutes on credit, because credit is a huge challenge, and how we are building another layer called Unified Lending Interface. So as the outgoing governor announced a few months back, the new trinity of Jan Dhan, Aadhaar, Mobile, ULI and UPI, the Unified Lending Interface, because in most of our global south, very few, a small percentage of people have a thick file which a credit bureau, with the credit bureau, that can be used for taking a loan. Estimate is the next 1/3 of people, especially in India, have a digital footprint. Going back to where I started, we are data rich, honestly. We are data rich more than maybe somebody in Boston. Most of us in Dar es Salaam or Delhi are data rich. How can we leverage this digital footprint of the economic digital footprint? For example, in India, there is a dairy cooperative where 3 million women have been pouring milk at the dairy cooperative for years. A lender says, I will not give you a loan. Why? Because the lender has no visibility. So what we have done is we have unlocked this, and similarly it goes on for gig workers, agri-farmers, because in Tanzania, I was talking to Kennedy, this is one of the challenges for youth. What can happen is potentially, if we can implement very low-cost QR code-based acceptance infrastructure, matching guys. I was reading how there is a lot of informal hawkers out there. Imagine a situation where every hawker can have a QR, and when you and I are buying apples to bananas to anything, we can just pay. Is it cost effective? Maybe not today. Well, I was looking at the pricing. Imagine a situation if 335 million people, that's the adult population, on an average in any country, they do 10 transactions a day, which means 350 million transactions a day. And if we were, just as a ballpark I am saying, charge just a 10 Tanzanian shilling, that will mean 3.5 billion shillings a day income to the ecosystem partners. Does that make sense? I'm not sure, but you know better. I'm just saying because incentives for anybody to accept digital starts with pricing. That needs to be maybe looked at, and in India we have tried to do that. But coming back to these.
Meet Padma. Padma, a dairy farmer from Tamil Nadu, has travelled a long way, losing a day's wages, to apply for a loan at her local bank branch. At the bank, she realizes that neither does she have the required documents, nor can she arrange for many of these. And since this is the first time she is applying for a loan, she has no credit history either. To the bank, she is a blank page. Fortunately, with the Unified Lending Interface or ULI, this is no longer a roadblock. The ULI is a revolutionary credit digital public infrastructure that brings together data providers and lenders to serve the needs of citizens like Padma on a single platform. Here's how it works. While the ULI facilitates access to data on a customer's economic activities, it also allows financial sector players to access data by connecting into the platform with a plug-and-play model. So Padma doesn't have to spend days trying to source documents from different places. Instead, the bank, through ULI, can fetch data on Padma from several sources. Milk pouring data from her local milk society to establish cash flows, her land ownership details from state land records, and insights from her farming patterns. As a result, what was a blank page to the bank is now a complete picture of Padma's business, income, and credit eligibility. Which means decision-making can now be automated, the application approved, and money disbursed into her account, all in a matter of minutes. With ULI, the immense potential of India's digital ecosystem is unlocked, converting siloed data into actionable insights that fuel frictionless lending. Now, billions of citizens like Padma are no longer blank pages. Join us on this journey as ULI democratizes credit, empowering every Indian's growth story.
So basically an example I'll give you which might echo here in most of sub-Saharan Africa. It used to take about 4 to 6 weeks for a farmer to get a loan of $1,000. Thanks to ULI unlocking the economic value of data, we made it less than 5 minutes. It's a straight-through process, just APIs through Unified Lending Interface, and it's just 3 to 5 minutes a farmer can walk away with a loan. So 5 weeks to less than 5 minutes is what we've been able to achieve thanks to this. And the regulators' role, obviously, they have been proactive. They set up institutions such as the National Payments Corporation of India, which runs UPI, and the Reserve Bank Innovation Hub, which I represent, and fostering innovation by the private market. That has been an important element of what the regulator, Reserve Bank of India, has been doing. The Reserve Bank Innovation Hub, which I represent, is a wholly owned subsidiary of the Reserve Bank of India, and it was set up about 3.5 years ago. Basically, there are fintech players, there are banks, there are technology providers, academia, all of that. It's not easy for a central bank to bring all of it together. Hence, an independent company was set up. That is, we kind of complete the puzzle. There's a lot we'll do. We are done.
Why is my banking app so complex?
मेरी बैंकिंग प्रॉब्लम्स को सॉल्व करने में इतना टाइम क्यों लगता है?
ನನ್ನ ಬ್ಯಾಂಕ್ ಖಾತೆಯಲ್ಲಿ ನನ್ನ ಇಷ್ಟದ ಪ್ರಕಾರ ಉಳಿತಾಯ ಯಾಕೆ ಮಾಡಬಾರದು?
I have a great fintech idea, but I come from small town. Where do I get the support to grow?
These questions have the power to drive significant change. And these are the questions we seek to solve here at the Reserve Bank Innovation Hub. As a wholly owned subsidiary of the Reserve Bank of India, we are driven by a simple yet audacious vision.
We aim to achieve frictionless finance for 1 billion Indians.
Central to this mission is our commitment to use technology to drive innovation and inclusivity in financial services. And we do this with a multi-pronged approach. We design products, processes, and solutions for players in the financial sector from only one perspective: the customer at the center of everything. We build cutting-edge products and digital infrastructure to enhance access, quality, and safety of financial services across the country. We incubate fintech startups from every corner of the country and at every stage of the life cycle to enable market-led innovation in the industry at scale. And finally, we provide thought leadership. We deliver insights to address current and future challenges for the industry, nudging stakeholders to think differently and impact change at scale. Over the last 3 years, we at RBIH have undertaken projects that have digitized and enabled finance for various citizen cohorts, empowered entrepreneurs to go to market, and solved for industry problems. Armed with learnings from these projects and an unwavering focus on our vision, we are all set to embark on the future of finance in India.
We are on a mission to make frictionless finance possible for every Indian, the way they want it, where they want it, how they want it. The future is exciting. Let us join together to make it a possibility. So that's about RBIH. The last thing on trust. As a result, we build a vibrant innovation ecosystem. We have fintechs from 10,000 to 25,000, 25 plus fintech unicorns that have been established. Having solved this, India is now also on a journey to solve for trust. Basically, two important things. As I was talking to somebody, I think in the morning, that as countries become digital, the trust element has to be addressed, and there are ideas related to automated grievance addressal which countries can implement, and also digital frauds will increase. As we build expressways in Germany, autobahns, yes, there are accidents, but the central banks can build systems like digital frauds, use AI/ML, which we are deployed in India, and have managed to reduce suspect mule accounts substantially. Early days, but the results are very, very encouraging. With this, thank you very much for your attention. I hope it was useful. Thank you again for inviting me, Governor. Thank you, Fernando. Thank you.
A second round of applause to Bansal for an outstanding presentation that he has made. We thank you so much for sharing the Indian experience, and we know our journey doesn't end here. Our good government already has a memorandum of understanding with India in terms of learning, in terms of digital public infrastructure. Some of the experts did get experience from India, and we've picked more insights, including the frictionless finance that you pointed out. Colleagues are picking up resolutions that are coming from this presentation, and we will be banking to further enhance our engagement with you. Ladies and gentlemen, maybe I pick one or two things that Ms. Rajesh has pointed out, just two. One, he pointed out that the journey of India started with simplicity. You could see how they address the parameters to which they identify a person. They identify who you are at the point of transaction. Secondly, they address the key frictions in engaging in transaction, and that's pricing. And he gave some ballpark analysis of 35 million, 10 shillings, 35 billion a day. Because in average, globally, at least it's shown empirically that an individual will transact at least 10 transactions a day. So if everybody is digitized, multiplied by the population, just by bulk figure anyway, that's what could be the value that the ecosystem will be bringing. Thank you so much also for the innovations that you are running, and also for the innovation hub that the Reserve Bank of India is really pushing. Truly a leader. Thank you, Bansal. And now we'll be moving directly to Brazil, the Central Bank of Brazil. Brazil is actually leading in digitization in the Americas. It's one of the leading countries globally when it comes to innovation. And the Central Bank of Brazil is at the center of this. We'll be discussing the topic of open banking and new innovation in the financial industry across the world. It has been proven, open banking in money markets, different approaches are used. In Tanzania, we're actually having one, and not to mention much, but the market is also doing some works on open banking. So Mr. Matheus is online, and I think probably you connect him so that he greets us and he moves on to his presentation, which will also spend 25 minutes like Bansal. Matheus, can you hear me?
Yes, I can.
Perfect. We really appreciate the fact that you're with us, and it's 2 a.m. in Brazil, if I'm not mistaken. Thank you for your commitment to be with us in these wee hours in Brasilia. Open to you now. You can greet. We have the privilege to have in the audience Honorable Minister of Finance, Dr. Mwigulu Nchemba in Tanzania, We have the governor of the Central Bank of Tanzania, Mr. Emmanuel Tutuba. We also have permanent secretary of the Ministry of Finance, Revolution Government of Zanzibar. We have former governors. So the room is packed with dignitaries, CEOs, and so Matheus, your presentation needs to have that impact that you're already going to create and share your experience from Brazil. And you have your 25 minutes. Welcome to you, sir.
Thank you so much. It's not so early in the morning. It's actually 5 a.m. here. But it's a pleasure to be here. I would like to start by thanking the Bank of Tanzania for inviting the Central Bank of Brazil to share a little bit of our experience with open finance and with other digital financial innovations as well. So without further ado, I'm going to start my presentation. And to begin, I would like to first establish some underlying factors that were already happening in Brazil before we started thinking about open finance, thinking about PIX. So to start this, I would like to mention that some years ago, we adapted our regulation to allow for the opening and closing accounts via digital means. So this was extremely important to make it possible for the population to open and close accounts using only digital means, not having to be in person in a bank branch. Another thing is that the Brazilian population is really prone to adopt new technologies. So this is something that Brazilians in general, they like to be early adopters. So this helps a lot when we are testing new technologies. Another thing is that we have an innovative regulatory framework. So over the years, we have been adapting our regulatory framework, making it more digital, and allowing the institutions to have more flexibility to provide their services and their products to the population, while at the same time we aim at making them deliver safe products for the population. So it is hard to achieve this balance between innovation and safety, but I think so far we were able to achieve that. Another thing as a foundational layer for this is to have a consolidated and centralized payment system. Even before PIX, the Central Bank of Brazil, over some decades, we already had a really evolved payment system. This was due to our high inflation period. So we had to have a really efficient payment system. So at least we were able to learn from that period of high inflation, and we were able to develop a really fast payment system even before PIX. And all of this helped moving to another layer, which was we were able, since the 2010s, early 2010s, we already had, and we were building a thriving fintech ecosystem. And to have this fintech ecosystem helped a lot in moving forward with new digital innovation mechanisms, especially because we had these companies focused on technology, and they were also pushing us to move forward with adapting our regulatory framework to keep a level playing field between all the players. And they also made the traditional institutions really focused and moving also forward for more digital innovation. So the thriving fintech ecosystem was extremely important. Another point is that we and this is more focused on open finance. So we had emerging businesses models focused on data aggregation. So even before the regulatory-led open banking and open finance here, we already had the business models focused on that. So they were using techniques such as screen scraping, which we do not think it's completely safe for the clients and not so efficient for the companies as well. But we could see that this was already happening here, and we were sure that there was a demand for data aggregation in our economy. And the general data protection regime that was approved by the National Congress, Brazilian National Congress in 2018, which made sure that the data belongs to the customer. So it doesn't belong to the institutions. So the customer is the owner of his data, and he can choose to share it with other institutions. So this was extremely important, and it gave us comfort to move forward with our open banking and open finance regime here. And then we had in 2020 the creation of our instant payment system, PIX, and of our open finance regime. And it's really important to mention that they are moving forward together. So they are two strategic projects of the Central Bank of Brazil, and they are complementary, complementing each other as both of them evolve. So these are some of the underlying factors. There are more, but I think these are the main ones to show that it's really important to keep moving forward, but it's not like you can just from one day to the other, just develop an open finance or an instant payment system. It has to be built under layers and layers of innovation that have been happening over the years here in Brazil. So the open finance PIX and the DREX, which is our project on CBDC here in Central Bank of Brazil, they are all part of an agenda of innovation by the Central Bank of Brazil, which it started as the Agenda BC Plus, and then it evolved to the Agenda BC hashtag. So there are some layers of innovation in this agenda, and open finance is within this foundation of competitiveness. So now I'm going to tell you a little bit more about our open finance. So the definition of open finance in Brazil is the standardized sharing of data and services between licensed institutions by the Central Bank of Brazil. So we only allow licensed institutions to become participants of the ecosystem. And we are not only talking about sharing of data, but also about the sharing of services. So the client can either share his data, or he can also use a service that is being provided by this ecosystem, such as payment initiation. So the main premises of our open finance is that it is required a previous consent by the customer, and this consent has to be connected to a specific purpose. The consent validity period must be compatible with this purpose, and it has to be informed to the consumer before he gives his consent. It is also important to mention that the consent can be revoked at any time by the customer, either in any of the institutions involved in that sharing. And that the data sharing occurs through standardized APIs in a safe, agile, precise, and convenient journey, which is a big evolution in comparison to what they were doing before open finance, which was using screen scraping techniques. So the main policy objectives of open finance in Brazil, it is to promote competition, to encourage innovation, to increase the efficiency of the Brazilian financial and payment systems, and to promote financial inclusion. And more to the end of my presentation, I will show you some of the benefits that we are already having with open finance here in Brazil. So I do not want to go into details on the participation requirements, but I think it is important to mention that it is of fundamental importance as we evolve with the implementation of open banking or open finance, that the Central Bank of Brazil must follow all of the regulator must follow the discussions that are happening in the ecosystem to be able to know when to flexibilize some requirements and when to make them more rigorous. So just to give you an example, in terms of data sharing, we had to expand the institutions that were mandatory participants. So we started with a set of institutions that were mandatory. It was the biggest institutions considering our prudential regulation. But then as we evolved into the data scope, we realized that we had to bring other participants as mandatory as well. So we were following the evolution of the ecosystem, and we realized that this needed to be done. By contrast, in payment initiation, we began with all of the account holding institutions as mandatory participants. And through the evolution of the ecosystem, we realized that some really small institutions, their clients, they just weren't using payment initiation back then, and they were having a cost of being a mandatory participant. So we realized that we weren't bringing any benefit for their customers, and we were only bringing costs to these institutions. So that's why we decided to flexibilize this criteria of mandatory participants for the payment initiation phase. So this shows how much the regulator must be aware of what is happening in the ecosystem, because we tend to use this word ecosystem to refer to an open banking or an open finance regime. And I think it is exactly like this. It is almost like a living organism that is evolving, and the regulator must be aware of this. Another thing to mention is the implementation status of our open finance. So we already have lots and lots of data. The client is able to share lots and lots of data and also services. So we begin with the sharing of data of the participating institutions. So in the first phase of our open finance regime, we didn't, the client weren't able to share his own data. So the first phase was the institutions publicly providing APIs so that developers and other institutions could access data on access channels and products and services that these institutions were providing. So we are talking about data on accounts, credit card, credit operations, investments, foreign exchange, acquiring, insurance, and pension funds. After that first phase, we then allow the client to share his own data. So both registry data and transactional data. And transactional data, so far, the client is able to share data on accounts, credit card, credit operations, investments, and foreign exchange. In the future, we will be able to evolve into acquiring insurance and pension funds as well, and then fulfilling the initial data scope of open banking back when we approved the regulation in 2020. In terms of payment initiation, the clients can now initiate payments using like immediate PIX, which is our regular PIX, he can always also pre-schedule PIX, not only a single PIX, a single transaction, but also recurring transactions. So if he wants to pay for, I don't know, an English teacher, he can schedule recurring PIXs, for example, weekly transactions. We also have the intelligent transfers, which is a specific product that brings programmability to PIX and allows clients to set triggers. And once this trigger is set, for example, you can establish that every time one of your accounts goes below zero, it will get money from other accounts to cover that balance. So these are some examples of triggers that can be set by the client, and then it will be automated by the payment initiation service provider. And it was released last month, in the end of last month, so almost 1 week ago, the no redirection payment initiation journey in Brazil, which brings more convenience for the clients because he will not be redirected in each payment that he does, and it allows digital wallets now here in Brazil that are acting as payment initiation service providers to bring PIX by contact in local stores, so in physical stores, so the client can now pay using PIX just as he was able to pay using credit or debit cards just by approximating his device to the POS. So this also brings more convenience to the population here in Brazil, and this is one example of PIX and open finance together bringing more innovation to the population. And how can we do all of this? I think it's extremely important to mention that there is no IT development in the Central Bank of Brazil regarding to open finance. So in the beginning, when we were thinking about how this ecosystem would work here, we never wanted the Central Bank of Brazil to be developing and to be coding anything. So since the beginning, and we learned from other jurisdictions, mainly here I would mention UK. So the United Kingdom has led, has founded a lot about this, and we learned a lot from them to have a single governance structure to handle the evolution of open finance. And last year we made a big step of bringing a more definitive governance structure, which in the beginning we had for 4 years an initial governance structure, and now we have a more definitive governance structure with a more formal and legal powers. So they have a deliberative strategic layer with general meetings and a board of administration. We now have an operational layer which is underway. So not all of this is already working, but we already have a CEO, and we already have the technology and operations directory, and all of the other directories are in the process of being created. And this will bring more professionalization for the governance structure, and it will help the ecosystem to keep evolving. And we also have the technical groups and squads, which is an advisory layer. And so now we plan to have the directories developing new APIs, developing new planning on the ecosystem, and then the technical groups and squads, which are composed by employees of the participating institutions. They will advise them on how to move forward and bring some details and perhaps some minor adjustments to the proposals of the directories. And it's important to mention that even though the Central Bank of Brazil does not have a seat on any of these, on the general meetings or the board of administration, we participate in all of the meetings that they have, both the technical ones, but also the more strategic ones, and we are always following what they are doing, and if necessary, we will correct their path just to make sure that they will achieve the regulatory objectives that I stated before. So we are part of all of these meetings, and it is extremely demanding on our workforce, but it's extremely important for the evolution of the ecosystem. And when necessary, we also regulate issues regarding open finance. So the governance structure, they have all of these layers, and they provide some services to the ecosystem. So they provide the participants directory, they provide the service desk where the institutions can complain about problems that they are having. So they complain about problems that the structure is having, they complain about problems that other participating institutions are having. And we also have a dispute resolution mechanism so that the institutions can handle disputes when they arrive. The governance structure also has the technical specifications. So we have a GitHub page where they have all of the technical specifications of the APIs of Open Finance. They also have a website, Open Finance Brazil, and one of the most important services that they provide is the monitoring service. And with the monitoring process, they can check the performance of each participating institution. This monitoring is an ongoing process, so we are constantly evolving and bringing more metrics to be able to monitor all of the performance of the institutions, and this is extremely important to make sure that the service being provided is of quality. Some numbers here just to show you how fast the open finance ecosystem in Brazil is growing. So in 2023, we had 27 million unique active consents and 42 million active consents in total, considering that one person can have more than one bank account, so he can have more than one active consent. So the first number, it's only considering individuals, so unique active consents, and the other number, this higher number, consider even in my case, for example, I can have more than one or two consents. So in this number is considering all of the consents. And we had over 1 billion weekly API calls of Open Finance APIs. In 2024, we have grown a lot. So now in the end of last year, we had 41 million unique active consents, over 62 million active consents, and over 2 billion weekly API calls, which showed a growth of 50% on average from 2023 to 2024 in terms of consents, both unique and total active consents, and 100% of growth in terms of weekly API calls that the institutions are making. And just to show you, in less than 2 months, from 2024 to 2025, we can already see that the ecosystem is growing at a fast pace, and we can already see this just by showing these numbers, how much it has evolved in under 2 months from 2024 to mid-February in 2025. And even the weekly API calls also have grown a lot. So in terms of the Brazilian approach, there are some trade-offs. And I would like to mention it to you, since you are also, the Bank of Tanzania is also developing its own open banking regime. So every time that I mention this about being like, there is always one trade-off between being a regulatory driven or a market driven approach. So even though in Brazil, we already have the market developing data aggregation techniques, we always know that a regulatory-driven approach, at least for our case, it was extremely important. Without the regime being mandatory for some participating institutions, I think we wouldn't be able to have reached where we are today. So regulatory driven, I think it's something extremely important for an open finance regime, because some of the institutions, some of the more traditional players, they may not have interests of joining this ecosystem, at least when it's in the beginning. And if without them, perhaps it will always be an ecosystem that cannot evolve. So it will always be in the beginning. So I would leave you the message that consider strongly making a regulatory driven ecosystem. Whether it is decentralized or centralized, here in Brazil, we chose the decentralized approach. So each institution connects with each other without a single hub. We have a single governance structure, but the data does not flow through that structure. So all of the data, all of the connections are made bilaterally between the participating institutions. Some other jurisdictions are moving forward now with a centralized approach. It has some benefits, but it also has some disadvantages, especially by becoming like the central hub that will connect all of the institutions, and even in some cases they may have all of the data flowing through that. It will become a big honeypot for hackers and fraudsters, and it also becomes a single point of failure for the whole ecosystem. So considering this, Brazil decided to go for the decentralized approach, which also has its disadvantages, because it's much more difficult to have the connections between all of the participants, considering that these are bilateral connections. The governance structure I already mentioned. In our experience, it is extremely important to have a single governance structure. And some jurisdictions, they operate with different strategies regarding this. Some do not have decentralized governance structure. Some, they do not even have a governance structure formalized. In terms of degree of regulators' participation, I already mentioned that the Central Bank of Brazil follow all of the meetings, follow all of the discussions, and I think this is extremely important for the evolution of the ecosystem, but at the same time, it is highly demanding on the workforce of the regulator. So each jurisdiction has to see what they are capable of doing, but I can also leave you the message that in our experience, being there, participating in the meetings is extremely important. And which companies can be participants? So there are some jurisdictions that allow for companies that may not be licensed to get data from an open banking and open finance regime. In Brazil, we decided to be more conservative, and we only allow licensed institutions to become participants. So there are also trade-offs involved, but so far I think we have done right by allowing only licensed institutions to become participating. I think this has proven to be a right path, at least for Brazil.
Thank you, Matheus. If I may interrupt you, maybe as you're moving towards closing, would you mind be closing in the next 3 minutes on the impact on Cash-Lite? We saw the numbers, and also what are the issues which I've seen there, like consumer-related issues, fraud, cybersecurity. Thank you, Matheus.
Sure. Yeah, so there are some risks associated to open finance. There are concerns about data privacy. There are institutions that will be able to access the client's data, and there are frauds. So those are some of the risks associated to open finance. In terms of data privacy, open finance in Brazil is completely in compliance with legislation on data secrecy and data protection, and the client must always give his/her consent before any sharing. So this is extremely important to handle the concerns about data privacy. So as I was mentioning, only institutions licensed by the Central Bank of Brazil can be participants, and they have to follow several regulatory requirements, including transparency, due diligence, suitability, and cybersecurity. So we also are able to mitigate lots of the problems that may arise by these institutions having access to clients' data. Regarding frauds, the governance structure must have a dispute resolution mechanism to handle this. The rules of this mechanism are set by the participating institutions based on specific scenarios. So this is important. It is extremely important to be able to have the specific scenarios for you to establish who will be liable for it. And these liabilities can only be assigned based on these specific cases. So just to finish my presentation, I would like to mention really fast some of the benefits that the population is already having with open finance in Brazil. In terms of credit operation, we can see improved clients' credit assessment, and also increase in credit originated by fintechs based on data shared through open finance. So there are some numbers here, and you will have access to these numbers to this presentation. I think perhaps you already have. There are more efficiency in credit portability, and payment initiation is also being used to facilitate installments payments. In terms of investments, you can have a global view of investment portfolio, more tailored investment products, and advice on portfolio rebalancing and diversification. We also have, the population has more access to financial management tools. In terms of payments, Pix with digital wallets was launched last week, as I mentioned. So this is bringing more convenience for the population. And there are others cases, use cases and benefits, including payroll portability, which has increased its efficiency. And just finishing my presentation, all of these digital innovation in Brazil has led to a reduction of money use in Brazil. So according to a survey conducted by the Central Bank of Brazil throughout these years, we could see that the frequency of money use is reducing in Brazil. It's becoming more infrequently. Some people are not even using money anymore. And we can show here that how much money is being less used in Brazil over these years, and how much, for example, Pix has grown since it was created. So this just gives you, considering the theme of this event of Cash-Lite, I think this shows how much digital innovation can bring the population to use digital payments and stop using money. And I think this is in the interest of all of the society. So I just finished here, and I thank you again for the invitation.
Thank you very much, Matheus. A round of applause for him. Matheus, I hope you just be online because we'll be moving to question and answer. And I feel I probably open just for 2 or 3 questions to you and our colleague from India before we move to the panel. So there may be some few questions that may be coming from the audience. So please, you may raise your hand. We know Matheus, it's 5 a.m. Probably now it's 6 a.m. where he is. And we have Bansal, and then we'll transition to the next session. Any question? 1 or 2? Yes, welcome, sir, from DG Rally. Can press the black button, yes, I think. Can we assist with the mic, please? Oh, thank you. You are.
issues related to affordability, because I believe and totally believe that digital transformation strategy cannot work, and actually affordability goes together with inclusivity. The more people that are left behind that cannot afford means you won't be able to cover a big percentage of population, especially when Tanzania, 60% of the population lives in rural areas. So what is the strategy that India has taken in order to minimize the cost of digitizing the economy? And I'm talking about the banking services versus the mobile transaction. Huge cost.
Thank you. Any further question? Maybe to Matheus from Brazil on open finance. All right, so yes, welcome, Faris.
Just a question for Matheus. Was there resistance from private sector players around sharing of information that they may have felt was their own proprietary information or something that they had developed from their own investments? So was there a challenge around exposing that information for the benefit of consumers to be able to have access to credit services or credit scoring mechanisms that would be available to all financial service providers?
Thank you. So we take those two questions. And I think, Matheus, you got the question? He's not audible. Maybe you're muted. Still, we can't hear you. Probably keep talking and then we find out.
Okay, so I was able to hear everything.
Perfect. Can you probably start to give you the privilege to start with that question? Thank you.
Thank you. So yes, there was resistance by some players, and there still is resistance. Yeah, through all the process, we made sure that everything we were doing was completely in accordance with the legislation on data secrecy, on legal and everything, data protection. So it was important to have a constant dialogue with these institutions. And I think one important aspect is that we do not put into our data scope, for example, the credit score of the client. So this is one information that it belongs to the institutions. So they have their industrial property on those type of data. So we are only considering here in terms of data scope, for example, the balance that the client has, the registry information on him, like the bills of credit cards. There are lots of information that belongs to the client, but some of the information that are part of strategy by the financial institution that has developed a model to assess the credit score of that client. That credit score cannot be shared using open finance. It's not part of our data scope. So there are some ways that we managed to find to reduce this resistance, but the resistance is always there because some of these institutions, they know the importance of data, and they know that having this data flowing through other participants, of course, with the prior consent by the client, will bring more competition. And this is what we are aiming for as a regulator. But some of these institutions, they wanted things to be as they were, so without so much competition. But yeah, so there are some conflicting interests between the participating institutions and even between them and the regulator. But I think in the end, we are moving forward with the initiative to bring more competition and better services for the population.
Thank you very much, Matheus. I think the answer is very clear. We now move to Rajesh for the affordability question. Please proceed.
Thanks, Kennedy. If I understood the question, I think what Sir was asking was the cost of building this infrastructure. Sir, is that correct?
No, it was more on what's your strategy? What's your strategy in enhancing affordability and the use of digital payments in India?
Affordability. Yeah. So, sir, when we started instant payment system in 2016, right from the word go, we wanted to ensure that it is near zero cost to the consumer, especially when it comes to P2P. But P2 merchant was still at a very small percentage. So a couple of other factors happened in India. In November of 2016, we did demonetization, which 86% of our currency was demonetized. That made a huge difference to the adoption of unified payment interface. It was just launched 2-3 months back. So people had no cash, so they started adopting. The second thing, which in 2018 or 2019, the government of India mandated that instant payment system would be free, which ensured that at the merchant side, the adoption just skyrocketed. So that has happened. The government of India subsidizes it through their fiscal budget for the kind of cost, although the market participants are not too happy about it, because the subsidy given by the government of India does not cover the total operating cost of 16 billion transactions a month. So it has been a huge, I would say, political, economic challenge. But affordability for the consumer and merchants is it's free. The ecosystem participants are now trying to find other ways to make money. And they have launched other services, including lending, to make it affordable for the people.
Thank you very much. That's very clear, the role of the government in terms of pushing affordability in India. Ladies and gentlemen, can we give a round of applause for the 2 outstanding lectures that we have received? You have done justice to us. Thank you so much for participating all the way from India and Brazil. And since you are here, we still allow you to listen through the panel discussion, which we will start immediately. And there may be afterthought questions. So if you're available, we'll be doing that. This panel, I'll quickly introduce the panelists without going so much on their CV, and we'll start with the first panelist. So we have Dr. Charles Mwamaja, the Commissioner for Financial Sector Development from the Ministry of Finance here in Tanzania. Mr. Mwamaja has vast experience in financial sector policy development, and we will gain a lot from him in terms of the initiatives that the ministry is doing, collaborating with the industry. And then we will have, in the panel, we have Mr. Mohamed Mashaka. He's the Director of System Development and ICT Services at the Ministry of Information, Communication and Information Technology. Mr. Mashaka comes with vast experience from IT, but also from system development and working hand in hand in development of the DPI for Tanzania. We also have Mr. Firas Ahmed. Please, you may join. Yeah, thank you. And just Mr. Firas Ahmed is the Group CEO of Azam Pay and Sarafu. Azam Pay is a company. It's part of the conglomerate of the Azam Group, but they are PSP that offer payment services in Tanzania, and they'll be speaking from the vast experience that he holds in this payment space. And we have also in the panel Mr. Jesse Jackson, Chief Manager Digital and Innovation from TCB Bank. He'll be speaking from the commercial bank perspective, engagement and innovations that they've been applying from an innovative space of enhancing customer experience. And finally, the last but not the least, we have Mr. Tony Misioka. He's the Director of Business Development of Liana Finance, a fintech that has been working to develop credit services, device financing, and other innovations that they've been playing in the market. Please, a joint round of applause to all of them, and then we'll proceed. Thank you. We will start with Mr. Mwamaja, and you'll be having we'll be doing 2 rounds of questions because we have time. So your first question, take at least 4 minutes to respond, or 3. And this is just speak to the broad strategic policies that the Ministry of Finance has been driving towards Cash-Lite in Tanzania. Over to you, Mr. Mamanja. Thank you.
Well, thank you, Kennedy, and thank you, everyone. It's indeed a pleasure to have this opportunity of meeting you in this important session. And I'll be speaking at policy level, and coming from the Minister of Finance, I think I would rather start by saying that basically there is no question that the use of digital services is indeed very critical for the economy. And in a situation whereby you have physical money in terms of coins and notes, but again with this digital transformation, gradually and slowly taking over at a bigger margin, we are observing a lot of difference, and the economy is performing much more better. But again, from statistics, data is showing that when someone is having physical money and another one is having money in a digital form, you will clearly observe that money is changing hands much more faster in a digital form. And this indeed is very healthy for the economy. And I remember to have been reading a certain document recently, and it was indicated that with the digital transformation that we are observing today, money is changing hands more than 7 times, 7 to 10, which indeed is very good, because it clearly indicates that every time money is changing hand, it is an indication that there has been an exchange taking place, or probably an economic activity has already taken place, which is very healthy for the economy. And so, as I said, at the policy level, there is no question about that. Now, from the Minister of Finance perspective, there are a lot of initiatives that the government has been doing in trying to support this very important transformative process, so that slowly and slowly, gradually, we will keep on embracing this digital transformation. And basically, even as we are talking today, we have very supportive legal and regulatory frameworks to support this transformation process. But even apart from that, there has also been some very good initiatives trying to create some very good and conducive environment to support this kind of innovation. And I think some of you are aware that in some sectors of the financial sector, we already have some regulatory sandbox regulations in support. I think in the banking, we already have them. In insurance, they're also being finalized, even in some other sectors of the financial sector. And this is very healthy, because what we are observing is, it is indeed very critical to ensure that the environment which we have can nurture and support this kind of innovation. And another thing which I think would also be important to point out is the fact that even statistics now indicate that since we started embracing this sort of transformation, financial inclusion has increased a lot. A lot of transactions have been taking place through MNOs and others. And at some point, you will find that even people, geographically this country is very big, but even people in very far rural areas are now transacting digitally, which indeed is very good. And so the Minister of Finance has been at the forefront of that, of course, working together with a number of stakeholders as well. But another point which I think is greatly important is that I think all of us who were present in the morning, we were able to hear the minister and the governor. And more often they kept on indicating that it's not just about the transformation process. It's also about bringing change into people. So there is a lot of work which has to be done to change the mindset of the people. Because most often people are much more comfortable when they have the physical cash. You know, if one is having 1 million shillings in his pocket, he thinks he has a lot of more money as compared to when he has a mobile wallet of the same amount. So you see, there is a lot of work which needs to be done to change this kind of a mindset. And so the Minister of Finance, again, together with a number of stakeholders, we are embarking on very comprehensive digital literacy, trying to sensitize people. Giving this sort of awareness is very, very important.
So if I may interrupt you on those two main points,
yes,
so
please.
that we transition to the other colleague. Can you speak a little bit of the digital literacy? So touch a little bit of how you're doing it and maybe what's the impact on the coverage, and probably things are changing a little bit. Just 1 or 2 points there.
Well, thank you, Kennedy. I think, as I had indicated, that this transformation really has to change people's behavior, has to change people's attitude. Because for quite some time, people are used to having a physical money, physical cash. And in a way, you can see that to some people, it brings some sort of comfort, that they are much more comfortable when they have physical cash as compared to electronic money. And so it is indeed very important for the Minister of Finance and the other stakeholders to embark on this kind of a digital literacy. So we have a very vigorous campaign, financial education, that it is very good for people to change. As I say that, once you have money in a digital form, it is much more healthy in the economy because you can easily track, but again, it changes hands much more faster as compared, when someone comes to you, Kennedy, and asks you for 10,000, even if he has valid reasons, sometimes giving someone cash, it's like you are parting with a certain part of your body. That's the situation in here. Yeah. And it's very different when it comes to the digital cash. So this is very important, and we have a team which is comprising of different stakeholders, and we have very vigorous, as I said, financial education so that people can move slowly. And as I say that this transformation is also a process, because it has been like that for quite some time.
Thank you.
But another thing, just a moment, is that to ensure that these sandbox regulations, which you have put in place, they are workable and supportive. I think that could also be a useful way to support this sort of transformative process.
Thank you. A round of applause for Mamaja, please, Dr. Mamaja. And as you can see, the ministry is working tirelessly to ensure that they create an enabling environment that the entire ecosystem will benefit from. Again, I'll go again to the policymakers, and this time I'll just go directly to Mohamed Mashaka from the Ministry of ICT. You've heard from India, the DPI, and we heard from the speeches that Tanzania is making a lot of building blocks. It's building a lot of the building blocks for digitization. And Bansal also pointed out from what he reads about Tanzania that Tanzania is in the takeoff stage. What are you doing from the ministry quickly, 3 minutes or 4, in terms of the DPA, and what are the pending issues that you need the audience to know? Welcome, Mashaka.
Asante sana. Back in 2024, I think on the July 2024, the President actually launched the Digital Economy Framework, which is a 10-year framework, as you have heard the guest of Hannah here elaborated it very well. Then the implementation of our digital economy framework, as a ministry, we developed what we call a Jamii stack. Some people call it Tanzania stack. Others, they branded it as Samia stack. Actually, the stack gives us a directives on the implementation of our digital economy framework and has three major layers, which is the bottom layer is an enabling layer where we talk about all these infrastructure, because when we want to talk about the Cash-Lite economy and financial inclusion, the issue of infrastructure is very crucial. I think the guest of Hannah here spoke earlier this morning about the issues related to connectivity with our fiber optic. Up to now, we are about 106 districts out of 139, and we're expecting to have 100% coverage in Tanzania by the end of this financial year. So that is the bottom layer of the stack. And the middle layer is actually a DPI layer. This is the layer which our colleague from India did explain it very well, and that comes to the question of what really important for us. Now, the DPI layer, which is a digital public infrastructure layer, is a layer that carries the whole stack. In Tanzania, as explained by our colleagues here from India, in Tanzania, we have our own digital public infrastructure, whereby we have a digital identity, which we call it Jamii number. We have digital payment, which we call it Jamii Malipo, and we have data sharing, digital data exchange platform, which we call it Jamii Exchange. So for the case of Tanzania, our DPI is also complete. Now, what levels are we in terms of implementation? For the case of digital identity, so far with National Identification Authority, who issues the National Identification Number, so we branded it as Jamii number, because Jamii number is actually a digital identity number that helps us to conduct all these authentications online. I think we have heard from our colleague in India here, per day, they are conducting about 90 million authentication processes that go through their systems of identity. In Tanzania, we've actually registered about 25 million people out of the potential 33 million as per the census of 2022. So looking into it, with the National Identity Platform, we have about 7.5 million transactions, which are mostly the authentication transactions, which goes through the NIDA gateway, which is actually common interface gateway, and we branded it as a Jamii Exchange now. So the 7.5 million transaction that goes every month, with 25 million citizens who are above 18 registered on our database. If you go back again to the census of 2022, the citizens and residents of Tanzania who engage themselves on economic activities are about 24 million people. So this means, in any way, there are few numbers that has not been covered by NIDA. So we have a higher chance of implementing this Cash-Lite economy to that prospect, because with the Jamii number as a digital identity number, as explained by our colleagues here from India, to them, they have fingerprints, they have iris, and they take photo as well. To us, in Tanzania, we have captured fingerprints, and now we are moving into an iris, but also we also capture the photo. So this means in Tanzania, in terms of identity and digital identity, for us to help us to go into this Cash-Lite economy, we really don't have an issue there. It's for us now to see how we can maximize the utilization of our identity so that to push this agenda of digital transactional services that can occur in there. So that is the identity part. So the DPI layer has digital identity, has also digital payment. With the component of a digital payment, the establishment of TIPS as a Tanzania instant payment system, this carried as a major infrastructure to our DPI layer, because this now actually integrates all mobile money transactions, the financial transactions. So all these banks and non-banks, all of them actually goes interoperable through Tanzania instant payment system. So that's why we say on our DPI layer, for the second pillar of digital payment, we are actually very good. And the third pillar is actually an exchange. How do we share data? And one of the key areas that even our colleagues from Brazil here, they spoke about, is the issues related to personal data protection. In Tanzania, we enacted an act back in 2022 of personal data protection, and we have a regulation for that. In Tanzania, just recently by December, we have about 15 data exchange platforms. 15 data exchange platforms that actually share data from one another. And into these 15 data exchange platforms, 898 systems actually share data on there. 514 of those are from public sector, and 384 are coming from private sector. So you can see when we talk about the DPI layer in Tanzania, with digital identity, digital payment, and data sharing, actually we are really good. The issue now is how are we going to encourage more people now to use this DPI layer? In a very simple language, we always say the DPI layer is like a road. The government build a road, build railways, for us to travel from one point to another, for us to travel our goods. So the DPI layer is an infrastructure into a digital platforms. For us to do all these, the Cash-Lite economy and all this, we need a DPI layer ready, which is actually the middle layer. We need identity, we need a digital payment, we need an exchange platform, which we are really good into that aspect. Now, what comes around now is the top layer of the stack, which is actually now we talk about the issues related to fintech, we talk about the issues related to all these solutions that can be built to work on top of this layer. And these are the digital public goods. For example, just to wind up, with NIDA, by using their national identity number, which we call it a Jamii number, we have about 35 banks which have been connected to NIDA. And all these banks, they use an identity. They use the Jamii number to authenticate their customers. So that means we need more banks to come into place. And these banks are like digital public goods on the top of the layer, and they use the middle layer, which is a DPI layer, as a digital public infrastructure. So as a country, we are really good, and we have a good foundation in terms of execution of our Cash-Lite economy.
Thank you. A round of applause, Mashaka. So we'll come back to you because you posed the question, which is the fundamental question of this event. How do we make some of this infrastructure scale EUs to address the Cash-Lite challenge that we have? And now we're moving to the fintechs because you've just mentioned that point. And I'll start with Faris. From Azapay, welcome again. We're very privileged to have you here. Firas, can you just mention a little bit of how you've been moving the Azapay platform, how it has been expanding, the solutions that you have in general, but the model that you're applying and its potential to expand open banking in Tanzania. Karibu.
Sure.
Cash-Lite.
Cash-Lite.
Yeah.
Cash-Lite. So, okay, maybe I can start with the following. And thank you very much for the invitation. It's quite an honor to be here, to be speaking to this audience. By a show of hands, if you were to buy a bag of mchele for 5,000 shillings in cash, how much do you think it would cost to buy it digitally right now in Tanzania? Does anybody have an idea of how much that 5,000 shilling bag of mchele costs digitally? I have the answer. It's on my phone right here. I have a screenshot of the payment. Any idea? I mean, we're talking about financial inclusion and Cash-Lite. We should know the answer to this question, which is the vast majority of people in this country buy a bag of mchele for 5,000 shillings. What would it cost them if they bought it digitally? I'll give you the answer. It's 5,950 shillings to buy that bag of mchele digitally right now. So we're talking about a lot of things on this in this conference, but that's in fact the that's the answer to the question, why are we not going Cash-Lite? If you look at the mobile money space in Tanzania, actually there's a tremendous amount of innovation that's happened in mobile money in Tanzania, and it has in fact made life and business quite easy for a segment of the population. And that is in fact the case, that this has been quite a bit of a revolution. In fact, Tanzania is perhaps one of the most innovative mobile money markets in the world, but at the same time, it is also one of the most cash-intense economies in the world. So how do you square these two realities? That you have perhaps the most advanced mobile money economy, and at the same time, one of the most cash-intense economies. So I'll walk you through the way we've thought about this in terms of how we can innovate, okay? What I see has happened in Tanzania is a question of pricing and segmentation. You have a segmentation of the mobile money market that has been very well serviced, okay? And that involves various types of transactions, such as P2P, merchant payments, bill payments, essentially around convenience. So if you were to ask someone, is it easier for me to send 100,000 shillings via mobile money to my mother in a village, or is it easier for me to send 100,000 shillings of cash to my mother in a village? Everyone, hands down, would say use mobile money. And in fact, that use case has been extremely well serviced. Very efficient, very low cost. No one would prefer to get on a bus with an envelope of cash to hand that cash to their mother. So we've already addressed that segment. Now what has happened is that segmentation has a set of pricing structures around it. And that pricing structure has now been used across the entire segment of the economy. So the pricing structure required to get money across distance is different than the pricing structure required to incentivize payments at, say, a point of sale. So we were talking about 89% of transactions still in cash. In fact, Eric is here from FSDT. FSDT does excellent work in tracking some of these issues. So in a recent report, they indicated that 98% of grocery transactions in Tanzania are made in cash. So if you consider what are the main things people spend their money on, it's in fact food, rent, housing, these types of things. So if food has received 98% of its transactions in cash, then why are we confused about why we're not transitioning to Cash-Lite? Those transactions, there's no incentive on the part of the consumer or on the part of the merchant to accept a digital payment at a point of sale transaction, almost none, okay? Because the convenience issue is relatively settled. If I have cash in my pocket, I pay at that moment. There's not a lot of time that's lost. There's not a lot of convenience that's created. So the question then is, how do you create value propositions that would drive that transaction to happen digitally in the absence of, regulatory changes such as what we heard from Mr. Rajesh around demonetization, or essentially creating extreme situation for that. I would argue you need innovation, okay? And I would also argue, and I'll borrow from a theory presented by, this is a Harvard business professor, his name is Clayton Christensen. He wrote a book called The Innovator's Dilemma. And that book explained why is it that established companies do not innovate. So he explained that established companies typically don't innovate. And by innovation, I mean going from 98% cash transactions for groceries to say 70% cash transactions to groceries. This is a step change innovation. Why is that not happening? Because established players tend to, in fact, always service their best customers, okay? Those best customers are the ones that the company itself is designed to service. Established companies are not designed to service people who are not their customers. And those 98% of grocery transactions are currently not the customers of the established players. So to expect them to innovate and address that need is confusing the issue. In fact, this theory of innovation around the dilemma of the innovator's dilemma is the established company is doing exactly what it's supposed to do, servicing the existing customers. Disruption or disruptive innovation, which established companies are not good at, are the ones that will come and look at value propositions that will drive adoption of the grocery payment from 98% cash to say 90 or 80 or 75%. So I would argue, and I'll wrap up right here, I would argue that it's necessary to create the enabling environment. And that enabling environment really, for me, in the digital payment space is two issues. One is access to the customer, and access to the customer can be ring-fenced or structurally inhibited by things like USSD access, charging exorbitant rates for USSD access. And the second one is what Mr. Rajesh mentioned, was interoperability around agents, okay? So you have many, many agents in Tanzania that service customers because we don't have a lot of bank accounts, so people get paid in cash. They need to convert cash to digital. In order for them to do so, they need access to agents, and if those agent networks are siloed or otherwise they lack interoperability, then agents will not service new firms. They'll service existing firms, okay? Those existing firms don't have the incentive to innovate in the areas that you're talking about here going Cash-Lite. So until you release those structural inhibitions around access to the customer and access to interoperability of allowing customers to turn cash to digital easily, you will continue to persist in a highly cash-intense environment because established players are not incentivized to expand that.
Thank you. I have to interrupt you there. Thank you so much, Firas. A round of applause to him. We're picking points. And surely cost is one of those key impediments, and of course access to data. With this, I think we'll transition very well to Jesse Jackson, Chief Manager Digital Innovation from TCB. Can you just, within few minutes, let's say 3, just point out the collaboration between banks and fintech, especially transitioning in the fact that how do you then ensure by that collaboration between yourselves and innovators, you're addressing the challenge of Cash-Lite and new products that you're introducing that are also adding into the question of affordability. Over to you, Jesse.
No, thank you very much, Kennedy. I think from a banking perspective, to address the Cash-Lite agenda, first and foremost, I think we have 2 major issues. One is to do with affordability, and the other one is to do with accessibility. Now, from accessibility, I think it has been largely addressed by the channels that are currently in the market. You know, Firas has spoken about agency banking. The recent, or rather last FinScope report shows that almost 89% of Tanzanians do have access to financial services within 5 kilometers. So to a large extent, accessibility is not really much of an issue. So the other issue that we have is to do with affordability. And I think there have been very good interventions from the regulator, interoperability on TIPS, TANQR, and the rest of the use cases. My colleague here, Mashaka, has also mentioned some of the interventions that the government is doing. You know, on bill payments, there has been evolution on GPG, which also in a way forces people to do these payments digitally. But I think from a banking perspective, what we are doing to try and address the same is to try and collaborate with fintechs to come up with solutions that address use cases that do form part of the day-to-day life of, you know, the customers that we do serve. So a bit of a background: digital banking back in 2010 when it started, it was purely aiming at addressing the basic push-pull capabilities, withdraw and deposit. But because of these customer needs that are ever evolving, we advanced further to bill payments, digital banking catering for banking as a service. But now we are in an era where for digital banking services to be relevant in our market, then we have to have services that are addressing the use cases that are to do with lifestyle. How does our digital banking services cater for investment? How does our digital services cater for savings product, loans, etc.? And that's where our collaboration with fintechs come in. Banks, we are collaborating with fintechs in avenues that are meant to cater for those lifestyle kind of use cases. And I think if we get that aspect or avenue well, we'll move in the right direction towards attaining the Cash-Lite economy. Customers do not want to have multiple channels to access services. They want to have one channel that have multiple services consolidated in one, but also addressing the larger aspect of affordability. So I think that would be my submission, at least from what banks are doing as far as a Cash-Lite economy is concerned. Thanks.
Thank you very much, Jesse. A round of applause to him. Yeah, we'll be getting some questions in terms of maybe additional follow-up on the affordability aspect, but surely you're doing some work there, which is great. And finally, we'll be going to Eliana, the fintech in the room again. So, Mr. Misioka, can you just give us two or one big point that you've seen the fintech community in Tanzania is working towards advancing Cash-Lite, new innovations in the space, and maybe some of the few areas that you think will be enablers to unlock your potential? Karibu.
Asante. Good morning, everyone. And first of all, I'd like to thank God for actually giving us this day and actually selecting me to be sitting here out of hundreds of fintechs. So the market is, so we're in a very interesting situation. We have, luckily Tanzania is one of the biggest market in East Africa. We have the biggest addressable market in terms of many, many business opportunities. So among the, when it comes to Cash-Lite economy, Laina has been doing digital lending, offline as well as online. Offline meaning customers who want to have access to credit, they can easily go to the point of service and get digitally assessed there, and they qualify whatever they want to, and they can actually access credit. And we achieve this by, of course, integrating to different data points. Credit Reference Bureau, we work with also FSDT in some specific cases. So we see once you start addressing a specific problem, you realize it becomes more of like a supply chain problem. We primarily focus on, for example, smartphone financing, where you enable customers to buy now and pay later. As time goes, you come to realize there is an equal distribution of smartphones across the country. So if you go to the rural areas, they don't have, let's say, Samsung S-type. So then when you ask questions to these merchants, you realize it's a question of they don't have enough resources to finance the stock to keep these products in different areas. Now, as a fintech, these problems, they sound bad and good at the same time. Because when you hear that they're having challenges with having enough stock, you start thinking, aha, there's an opportunity around suppliers financing. And now you start going back to build another case, like how do we address that? The issue of that Firas raised of transaction fees it is huge, and it is very evident. But I do give a lot of recommendation and pride, if I may say, I give a lot of praise to the central bank for, first of all, putting tips, because that system aims at significantly lowering the cost of transactions. So the question of whether are the players adopting as it is intended, maybe it's too early to answer, but we believe with time it shall happen. The second part is also on the sandbox, where now for fintechs, now we can come up with a solution, and immediately, if it is outside the scope of the regulatory framework, you have a chance of testing your idea. But we still see the society needs more use cases to adopt into a less cash or cash-light society. And good, bad example I may use is when we look at betting. There was no issue of financial literacy or anything. Immediately, almost every youth, they know how to bet. How did they achieve that, and we can't achieve in actual key issues that we are facing, or the society is facing? Because for me, among the key challenge we face is the financial literacy. At some point, we designed a solution. I was sharing with Doctor a moment ago about digital financial literacy, which aims at highlighting, using data to drive financial literacy, and building the solution around 4 blocks. And one is credit, the second is savings, the third is investment, insurance, and pension. And the main idea is most of our community members, we don't bother to look how much will I be getting when I retire. It comes as a surprise that, what? Am I getting $1 million only? Why? And if you haven't prepared, it's a disaster. So hence, we believe as fintechs overall, Laina and so many others, we have a role to play, designing different use cases that will address some of these gaps that have not been addressed as of yet. Because when we look at the setup and foundation of most of the ideas, the banking, the SACCOs, they were addressing 1 or 2 key major challenges. And technology has actually surfaced a lot in terms of customer awareness is bigger. With technology, even though we design solutions that aim at solving a problem, you find yourself in a cybersecurity challenges where there's fraud going on. But collaboratively, I think we can achieve a lot. And I still say I praise a lot what the central bank is actually doing. So thank you.
Thank you very much. A round of applause to all my panelists. Now, because of time, I won't go to any of the round, but of asking subsequent questions, because there certainly are many, but I allow 1 or 2 from the audience, and then we'll be closing this panel. Any questions to any of the panel members, not to me? Welcome, Professor Esther.
Okay, thank you, panelists, for very interesting talk. Yeah, my point goes to Mashaka. Yeah, it was really very fascinating to hear the progress being done up to today. But then also listening to the experience from India, as well as from Brazil. Then my question is, to what extent the progress being done and the investment being put in the infrastructure is going, let's say, to trickle down to people in the villages, the farmers, because those are the ones I see being very highly excluded. And when it comes to cashless, I don't see them going forward. To what extent, for example, the investment being put in place is going to be useful, for example, to build the credit history for the farmers so that they can be able to access credits, as well as also to be able now to Ms. Okia, to be able also to understand on, for example, when they are doing transactions, to be able to know the way they are transacting, how much they are getting. If we can be able to have those digital tools which can facilitate them so that at the end of the day, one can be able to see how much he has consumed, how much he has sold, and to keep track so that they can help them when they are doing any of the investment decisions. Of course, Firas, I know you are doing that on the other side, but to what extent are those useful to people in the villages, the farmers, the fishers? One time I was in Kigoma, and then we were with the NMB Bank, and we wanted the fishers to open their accounts, to use, to use the bank accounts for their transactions. But then we came to realize in that the participants, there was a group of fishers, processors, who were the youth. And it was to our surprise, they told us, okay, we are having, for example, cash, but we are keeping our cash at home. You know, they are operating as this group, you know, the Vikoba Group Finance Association. But they are keeping more than 20 million at home. Now the question was, we are here talking about the issue of cashless, the issue of to what extent whatever we are doing here are going to reach the people in the villages so that to bring them in so that they can access the cashless and digital solutions. Thank you.
Thank you so much, Professor. That's a very practical question. And actually it's directed to everyone here, and I'll give them 1 minute each to give to what extent are we going to create that impact. Any further question? Welcome. Oh, yes. Karibu sana dada yangu.
So good afternoon to you all. So my name is Sandra Chogo.
Yes. Thank you for introducing.
So I'm talking about youth and unemployment. So we are talking about unemployment, but I can tell you that nowadays there are a lot of online jobs. But for the youth working online, there have been an outcry of about how are they going to get paid. Some of them are trying to use PayPal, but they have to get SIM cards from Kenya. Some of them are just using perfect money, and most of them are using cryptocurrency for payment. So how can the fintech people help the youth who are working online? Thank you.
Can we take one more and then we get the answers? Welcome, sir.
Hello, good afternoon. My name is Thomas. I'm from the Central Bank of Tanzania. Actually, my question
it will be about the cost of transaction. And our panelists and our presenter, they highlighted it as one of the big challenge. But for me, I've been asking myself, of course, I'm not serving the issue of fintech and all this Cash-Lite economy, but I just want to know what actually drive this cost, because if I compare some countries with Tanzania in terms of transaction cost, here in Tanzania is very high, and our panelist from the Azam Pay, he just said if you want to buy a bag of 5,000 Tanzanian shillings on cash, you can just pay 5,000. But if you can go online, you have to pay around 6,000, right? But I just want to know what really drive the cost of transaction? Is it the cost of development of those systems, or is this kind of the fear of the developers to see that if I'm not going to reap a lot quickly, some players, they can come in the market and I can lose that big margin that I can take advantage of just being the first in the market. Thank you.
Thank you very much. I'm just been alerted that I had given my back to Mr. Rajesh. You had a question. Please proceed.
Sorry, just a small follow-up question to the random idea that I took during my talk about 10 shilling. It's related to what the BOT person has asked. So I would like market participants to respond.
All right. So I'll just add one question to all these questions, that because each one of you had the questions. There's a question relating to costs. How do we pay online traders, the digital players out there, the youth, or those in gig economy, as they call it, and then cost of transaction. And the last one is one key lesson that you've learned from the presentation from Brazil and India, because we are all from the Tanzanian market, and what can you pick from that? So starting with Firas, just 1 minute to add into these responses. Or you can select one which you think you're comfortable with. Starting with the professor's question. Thank you.
So let me address since I'm coming from the payment space, let me address the payments issue and the affordability. The question around, okay, so let's go back to the 6,000 shilling bag of mchele. Actually, on Azam Pesa, which we've launched recently, that costs 5,100 shilling. Okay, so it's not impossible to lower the price. It is, and we are doing it right now. Okay, so it's affordable. The question is, why structurally do these high prices persist? It comes back to the point I was making earlier, which is existing established players have addressed a segment of the market with a structure of pricing for which they've applied to the entire market. So if you say the market is a size of 100%, they've addressed about 10%. The 90% is actually a very good business. You can make a lot of money servicing that 10% of the market. But applying that same pricing strategy to the other 90% means no one else is going to use your service. So in order to address and lower the price, you need to allow competition to come in and access the market and create those value propositions for that 90%, not just the 10%. So in fact, with Azam Pesa, what we're doing is we're not even going after the 10% that's already being serviced. We're attempting to go after that 90%, okay? And with respect to the transfer of money from overseas, in fact, I've met with PayPal. I've actually asked them, why are you not in Tanzania? They said it's not on our roadmap yet, okay? So, you can't rely on these multinational global corporations. They don't care about anything other than what they're doing. And in fact, if you want to know why pricing persists, it's because, finance people get involved and then they want to maintain the profits. So that's why things don't change. So I think for international remittances, in fact, we've just established an IMT hub license with the Bank of Tanzania, and we're working on solutions that could help facilitate local Tanzanians to get paid from international service providers, either through Upwork or whatever these things are. So we're in process of trying to build solutions for that right now. But the main point being, price is a function of improper market segmentation. And in order to change that, you need new players who are not interested in the old segmentation, but are looking at creating new segments and allow them to innovate.
Okay. Thank you, Firas.
All right. So for me, the issue of the cost of transaction, just to comment, I think when you look at the origin of how mobile money was created, was there was a very few people that have access to bank accounts. And then mobile money was created, but because there was a need to avoid to push people to go to the banks, the concept of Wakala was established. So now Wakala is the one that has access to deposit money to the bank account of the telco, and then the rest of the people, they're using mobile money to access, and then they can transact freely. Now there was a cost of Wakala, that's what they would say. And when you look further, for me, that was necessary by then, because it allowed people to transact digitally, and at some point, we could see more transactions which we could not see in the beginning. So now that there was already evolution, one of the challenge we would see as fintech is that if I have 100,000 shillings in M-Pesa or mobile money, and if I have 5,000 shillings in my bank account, in the eyes of the bank, I have 5,000, and it's the telco that has 100,000. And when do we break that? So breaking that, it means we have already been giving a lot of credit to the telcos, and they've made a lot of money through that. So when you're telling them that now we need to drop the cost, it becomes really difficult, because how will they justify that loss of revenue which they've enjoyed for the past several years? But then on the side, if we focus on the customer, the financial insight of this customer is actually distributed. Like if you see Tony as a mobile money wallet owner, I am this. As a bank account owner, I am this. And that creates a bit of a challenge in the market. I believe if we drive more people to have bank accounts, most of these costs can be easily contained. And in the absence of that, I would say most of the players, they enter in the payment space with money being the main product and not the other value. And when money is the main product, it's this whole discussion of cash, less cash, we're just having fun. So I would also challenge Firaz that you're coming from Azam, you have other businesses that will generate revenue. So Azam Pay should have focused on the product that the customer is buying, and transaction should be free. So it would have been a really good example in this case.
Firas, you can respond to that, please.
So I 100% agree with you. In fact, the problem in the mobile money space is the focus is on money movement, not on the underlying transaction. You should be consummating transaction. You should be managing trust, as Mr. Rajesh said. You should be managing risk. The money movement itself is the simple thing, and actually it's almost very inexpensive to move money. So in fact, that's exactly what we are doing. If you look at what we've done with Sarafa, we've taken 5-6 billion worth of wholesale trading in the retail market from cash into digital just in the last 3 years. And that's because we zero-rated the cost to the merchant to purchase digitally. So in fact, that's exactly what we're doing. And I 100% agree with you. And I think that this idea that moving money is, and what it does is it disassociates commerce from payment. So when you disassociate commerce from payment, you don't even care what transaction is happening. As long as money is moving from one point to another, you're making money, it doesn't matter. You have to be focused on who is buying and who is selling, and why is the buyer selling or not selling to someone else, and how do you mitigate the lack of trust between buyer and seller and facilitate. And so we're, in fact, we have a product, an escrow payment product that we're about to launch too, which allows unknown buyers and sellers to transact and not have to worry about whether or not the product will show up or the money is available. So these are the solutions that we're coming up with, and we are by far the least expensive service in the market. And as you said, agent networks do build cost into the platform. So you have to manage that cost, and until everybody gets paid a salary in a bank account, that's always going to be a cost as part of the overall platform.
That's a very, sorry I was interrupted, but that's a very good response in the conversation around what really is the value proposition for consumers. right? We consumers want to move value, and the value for us is what it's going to be providing us in terms of either it's goods that I'm buying or the service that I'm receiving in other aspects. Thank you so much, Tony, for bringing that. Jesse, do you want to add any of the response in terms of cost or picking up on the lessons that we had from India and Brazil in terms that you'll be taking from the banking sector? Choice is yours.
No, thank you, Kennedy. I think it has been adequately discussed with my colleagues. I would wish to take the question that was raised by Professor regarding how do we digitize the Vikoba. So I think TCB, we saw there was that challenge, and we did collaborate with Vodacom and M-Pesa. We created a product called Mkoba, which essentially was digitizing how people can save in their respective groups. However, the other challenge that we noticed then, 2019, was that the product excluded other members that were not Vodacom subscribers. So we've gone ahead and developed a product that is including all other MNOs, interoperable, and that way, to a large extent, we have addressed that problem. And of course, we understand the challenge around literacy around it. So we also have campaigns going all around across the country to try and educate people on how they can digitize their respective Vikoba. And for the last 2 years, we've been able to onboard 500,000 groups, which have almost 5 million members, and we've mobilized 200 billion out of those respective groups. I think my other contribution will be around, how do we jointly try and address the Cash-Lite Economy agenda. So we've discussed a lot on affordability, and I'll take just one use case, which is TAN QR. So now the payments for accepting payments, the solution for accepting payments is interoperable between banks and MNOs, and to a large extent is addressing that. However, if you look at our economy, about 30% of it is accounted by SMEs. Yes, we have addressed the acceptance bit of the payments, but still we have 90% of payments being done, using cash. And as it has been said, a lot of these payments are directed towards groceries. What that means, we still have a challenge in terms of bringing these SMEs into the digital ecosystem. Now, the question that we still have to address is how do we then smoothen the onboarding process of these SMEs so that they can come into the digital ecosystem and leverage on this TAN QR that we have as a solution. That way, I think we can drive significantly, because if you look at the payments now, I think it's less than 5% of the payments that are done digitally are channeled towards Lipa Number or TAN QR. Thank you.
Do you have any initiatives around that?
Yes, we do. So specifically for SME onboarding, we're coming up with a solution that will sort of have a marketplace for SMEs, and the onboarding process will be pretty much seamless, and that way we believe will drive this adoption of the TAN QRs.
We'll be happy to share the numbers with us. That's great. Thank you so much.
Thank you.
Mashaka, there was a question from Professor relating to the implication that we have had and whether that's trickling down on.
Yes, as Professor did explain the readiness of infrastructure, just to go straight to the point, I think the government has played a major role in creating an enabling environment. The challenge now is how these fintechs and other MNOs and FSPs, how do they pick it, from there and walk through the digital infrastructure. For example, we have gone as far as building, as I said, the fiber optic connectivity. The fiber optic cables in Tanzania, we have laid it to 106 districts out of 139. And we are really marching towards the completion of it by end of this year. We are building now, constructing the communication towers to the remote areas, about 1,500 communication towers, which we work with our colleagues from MNOs. The President did launch this initiative back in 2022, and the construction of these communication towers to the remote areas to help them actually to access these digital services has gone to almost now 80%. We have also managed to upgrade the communication towers. As you are aware, we talk about smart devices. We have some of the area where you can't access smart devices, where you can only use USSD code and these touchy phones and all that. We've managed to upgrade 304 communication towers in remote areas from 2G to 3G, 4G, and 5G, so that citizens in those remote areas can actually access these services. Now, the challenge comes when the government lays off all these environment. How do we now capitalize and use this environment to help us to enable these services to the citizens? Because you can see most of these FSPs, they're actually looking for customers around the big cities. We concentrate in Dodoma, Dar es Salaam. If you ask me today, I don't know how far they've gone as M-Pesa, but I know you are really coming fast. But have they gone to the Kantalamba villages there? Do people access as M-Pesa to those areas? That becomes a challenge, you know? But why? Because, and coming to national ID, for example, we spoke about NIDA here. 25 million people have identification number, Jamii number, yet only 4 to 10 million people who are transacting into the financial services. So we as banks, we are just fighting for the same customers. I might have 4, 5 bank accounts, but we still have people in those remote areas that the government has laid over the environment, the infrastructure there. People have been given the identification number, the Jamii number in those areas, but how are we going to do it now? So the question now, we really need to work hand in hand with the private sectors. We need to promote these fintechs to come on board and go to these remote areas. One of the biggest challenge, I think, is the literacy level as well. Apart from all these infrastructure, how do we work together to make sure bibi yangu walioko huko kijijini knows about how to use even like a smartphone to buy goods or to access services. So the digital literacy is also an issue. But now, as a government again, we have actually itemized that as one of the key pillars into the digital economy framework, the digital literacy and skills and fintechs to encourage more to come into the game. And this is the time now they really need to utilize all these infrastructure that the government has built.
Thank you so much, Mashaka. I mean, I need to have a follow-up question on that. So it appears a lot is being done by the government. Infrastructure has been done, DPI, and starting with your own words, it's like the road infrastructure. The question you are raising here is usage. So having built a road, DPI, and you're seeing the usage is low, what are you doing to stimulate usage?
Yes, number one, first of all, for example, the issue Rajesh talked here about the zero balance account. This was a self-initiative from India to make sure they pull more people into the game. For us, we say we have a national ID card, which has gone to almost 21 million people. With the card itself, has a feature or has a wallet to enable the digital payment into it. So that means if the financial institution, the FSPs, can work in collaboratively with national ID, it can be easy for us to reach this higher population, especially in the remote areas. Because right now, talking about the banks to come and have this initiative of zero balance account, for them, the issue of revenue and profit will come into their mind. But we need to use these local resources which are actually in place.
Thank you.
Another thing, as the last part, is now the readiness of us. I think mostly is the readiness. When you have all these environment ready, we have the DPI in Tanzania. If we are ourselves not ready to utilize these resources, then that will become a challenge. But as a government, I think we are doing much. And more now, we are focusing more into the literacy and awareness and in collaboration with the private sector. And I believe together, I think we will reach far.
Thank you. Collaboration, literacy is quite important. And talking about literacy, which will be the last response we get from the panelists here, Dr. Mamaja, people are hiding money under the mattress. your financial education? Is it unearthing those cash out of the mattresses to bank accounts or to M-Pesa? Over to you.
Well, thank you very much. Indeed, the answer is no. You know, it's not healthy at all to keep money at home. Apart from the risks that are associated, it's also a disadvantage in the economy because that money was intended to circulate in the economy. But again, those people who are holding money, they're also missing some other opportunities. So partly to that can be answered through education, financial education, and we are aware of that because even statistics indicate that there is a lot of money which is circulating outside the formal financial systems. So partly to that can be solved through financial education, and there is a lot that the government, by working together with different stakeholders, we are doing to that. We have a very big, very comprehensive rural financial education program, and this program is intending to cover the whole country, all regions, all local government authorities. And so far, I think we have managed even to cover half of that. So through that, we can give them education, but also we can introduce some digital solutions to that. There are a number of digital solutions to Vikoba. There are a number of digital solutions to SACCOs and others. So probably, as I said, partly that can be answered to that. But again, at policy level, I think this could also be a very good input now to start considering how we transact by using cash in this country. Maybe it's high time now we can also start thinking of putting a limit on how much you can transact by using cash. Also, it's a way to make a push towards Cash-Lite economy. So those, I think, there could be some very good avenues, and I believe that with those we'll be able to solve this, solution. But again, maybe just to add quickly is that there is a very good breakthrough also in this country that when the Minister of Education was reviewing its curricula, they've been able now to accommodate that financial literacy ought to be taught starting at lower levels. And I think this is very good because it will also create awareness in terms of saving, investment, personal financial management, starting at very lower levels. Because experience indicates that sometimes when one is an adult, it can be a little bit tough to educate someone on the importance of saving. Yes, you can achieve, but probably you can take more time and a lot of resources. Thank you, Kennedy, for that.
Yeah, thank you. Can't train on all those new tricks. Thank you. So, ladies and gentlemen, we have come to an end to this outstanding panelists and panel discussion, which had brought on board several insights, which are mostly practical for us to take, but there are also some few pending unanswered questions. And these questions, we'll be taking them forward because there are elements that relate to research, there are elements that will relate to moving forward the regulatory environment and market incentives that need to be addressed. So just let's give them a round of applause and I'll do a quick recap and we move forward. Quickly, just as a summary of some of the takeaways that we're taking from the table here, and I know my colleagues are putting up some resolution, but we've had the two cases from India and Brazil sharing the digital public infrastructure. Thank you so much, Mr. Rajesh and Mr. Matheus in Brazil. Hopefully he's still there. But what we learned from them are key three lessons. Number one, they all went on through an incremental process, addressing some specific public policy objectives that they wanted to drive. Without going so much, there's an issue of competition, issue of conclusion, economic performance, efficiency of the payment systems, that they had to ensure that those will be addressed effectively. And they did that by harnessing innovation in their own market, strengthening digital innovations to promote those public objectives. Number two, these countries that we've had address fundamental pain points that consumers are facing. And we've had it even from our colleagues from Tanzania, and that's pricing, affordability. So they have addressed the accessibility point, but then it comes to, you have it, it's like window shopping. You see products, but if you don't have the money and the ability to use it, you can't move forward. So cost has been an issue, and that's what I'm saying, it's still a pending issue for us, how best we can address it. And the other issue is trust issues, consumer protection, cybersecurity aspects. How do you ensure once I afford it, I had access, I can afford it, I use it, but can I continue trusting these particular products that I'm having? So that trust framework is quite important. And finally, the points that we're picking from this discussion, it's also issues relating to collaboration. We may have all these efforts that are being done. This is not something that we can do in silos. Developing a cash-lite economy isn't easy. It's not an easy job. We've heard also from Brazil advising us we shouldn't expect that open finance, for instance, will be something that we can do overnight. Rome was not built in a day, and therefore we should make sure that we collaborate together, and we'll be able to walk far if we do the same. With this, ladies and gentlemen, it was an honor and a privilege to be together with you and the panel and the speakers. A round of applause to all of them. Thank you.
Thank you, Mr. Komba, for perfect moderation of this well-engaging and productive discussion. Another round of applause for Mr. Komba, please. I understand that we've run out of time, but please lend me a few more minutes of your time to conclude the program. Chairperson, if you may now allow me to call on stage the family of Mr. Gilman Rutihinda, the person who did a remarkable job in the banking and financial sector in the country, to deliver a word. Ms. Renata Rutihinda will deliver prayers for the family, and Mr. Roland Rutihinda will give a word. Welcome on stage. Please put your hands together for them.
Thankful for this stool. Let's pray. God, thank you so much for being such a good father to all of us. You're so kind, you're so gentle, your grace and your mercy. We thank you for that. We thank you, Holy Spirit, for your friendship and your companionship. Jesus, we honor you. Father, we thank you for the seed that you put in your son, Gilman. We thank you that it's carrying your plan forward for this country. We thank you for all those who have caught that vision, that continue to honor the work that you put in your son, Gilman. We pray for those who are carrying the vision forward, that they'll be carried in your grace, carried in your mercy, more importantly, blessed by your favor to bless this nation and bless this land and generations to come. We honor you, we love you, God, we thank you, and we bless this country. In Jesus' name we pray, amen.
Yes, please.
Good afternoon. Honorable Minister of Finance, Dr. Mwigulu Nchemba, Governor, Bank of Tanzania, Mr. Emmanuel Tutuba, Deputy Governor, Economic and Financial Policies, Bank of Tanzania, Dr. Yamungu Kayandabila. Distinguished guests, staff of the Bank of Tanzania, ladies and gentlemen, I would like to acknowledge my mother, Josephine, my sister, Renata, my father's brother, Uncle Max Rutihinda, extended family members, Sanili Siwe, Isaiah, Mwasi, Mihayo, and all those who made the effort to be here today. I want to begin by expressing my sincerest gratitude on behalf of my family, to all of you for being here and taking the time to honor my father's memory, his legacy, and the profound impact his work had. Your presence today means more to me and my family than words can ever convey. My father was a man of integrity, compassion, and unwavering dedication. He believed in the power of knowledge, the importance of kindness, and the value of leaving the world a little better than he found it. Today, as we gather in his name, I am reminded of lessons about resilience, humility, and the importance of giving back. This memorial lecture is a testament to his life and work. It is a way to fan the flames of his ideals, his passion, and for his spirit to continue to inspire future generations. I know he would be humbled by this honor, and he'd also be proud. Proud to see us coming together to celebrate these values he held very dear and continue the work that he set in motion. My mother says I always find a quote for this thank you speech. To prove that she is a prophet, here's another one. This one is about progress. The secret of making progress is to get started. I believe what we have heard today from all the guest speakers encapsulates getting started. Driving progress isn't just about the first step, but the willingness to make the thousands of steps to get to the finish line. We know there's a long way to go, ups and downs, successes and failures, and lessons to learn, but we will get there. I believe that this is what my father believed. Each step is progress to making our country better. Finally, to our hosts at the Bank of Tanzania and everyone who worked tirelessly to make this day possible, my family extends our heartfelt thanks. I thank you, I can assure you that Gilman Rutihinda is grateful as well. Thank you.
Another big round of applause to the family of Gilman Rutihinda. Thank you very much. Chairperson, as we know that this month we are celebrating women all over the world, please allow me to welcome the Deputy Governor, Financial Stability and Deepening at the Bank of Tanzania to deliver concluding remarks for this event. Please put your hands together for the Deputy Governor.
A very good afternoon to you all. I would like to acknowledge the presence of the family of late Gilman Rutihinda, board members, my bosses, former deputy governors, Deputy Governor Dr. Kayandabila, Permanent Secretary Treasury, Revolutionary Government of Zanzibar, Dr. Akili, all distinguished delegates here present. I take this opportunity on behalf of the Governor Bank of Tanzania to present the closing remarks. So much as the Minister for Finance is not here with us, but I would like to acknowledge him, Honorable Dr. Mwigulu Lameck Nchemba, Minister for Finance. I have already acknowledged my colleagues and the permanent secretaries, the family of the late Gilman Rutihinda. It is with profound gratitude that I stand before you to conclude the 9th Gilman Rutihinda Memorial Lecture. I extend my sincere appreciation to the Honorable Minister, Dr. Lameck Nchemba, our distinguished guest speakers, esteemed panelists, and all participants for the invaluable contributions, and commitments to advancing Tanzania's transition towards a cash-lite economy. Your insights have not only deepened our understanding, but also provided clear and actionable strategies to accelerate progress. Today discussions centered around the theme driving the shift towards a cash-lite economy, opportunities for innovation, financial innovation, and inclusion. This theme has actually reinforced the transformative potential of digital financial systems. We have drawn from global best practices, particularly the experience from India and Brazil. Thank you, Mr. Rajesh, and the colleague from Brazil who was online. So looking into the Indian experience, digital public infrastructure, instant payment system, and from Brazil, open finance frameworks in driving the transition to a cash-lite economy and financial inclusion. Specifically from India's experience, we have learned from the DPI-led approach can accelerate financial inclusion, improve efficiency, and foster fintech growth. India's journey, we have seen from the presentation that from 35% of adults banked in 2011, it grew all the way to over 80% in 2024. So this demonstrates the power of scalable, interoperable, and cost-effective digital payment systems such as unified payments interface. The Aadhaar biometric ID system has facilitated also smoothen financial access, enabling instant account opening, digital KYC, and direct benefit transfers that have enhanced social protection programs while minimizing frauds and inefficiencies. We heard from the presentation that actually a lot were reached very quickly, instantly actually, but also able to remove all ghost beneficiaries from the program. So we see a lot of the efficiencies and benefits from this. On the Brazil experience, Brazil's PIX system has proven that interoperable and real-time payment solutions can transform financial access, particularly for small businesses and low-income groups. We also learned that Brazil's open finance model has enabled secure data sharing, enhancing competition, transparency, and consumer empowerment in the financial sector. These insights provide valuable lessons for Tanzania's digital transformation journey. However, we acknowledge the challenges ahead. We heard from the discussions during the panel session that high transaction costs came out prominently, digital literacy gap, and the integration of the informal sector remains key barriers. So to address these, we have identified priority resolutions, most of which were actually part of the winding session. I mean, the key takeaways from the panel, but I will reiterate them. So one is strengthening policy and regulatory reforms, which requires accelerating reforms to remove barriers to digital payments, enhancing interoperability through TIPS, and facilitating secure and efficient data exchange. So there is work to be done in this area of policy and regulatory reforms, but also expanding key digital infrastructure, which involves investing in nationwide connectivity, fast-tracking adoption of universal identification to all Tanzanians for a smooth KYC, and improving digital payment rails for efficiency and affordability. Another one is on promoting innovative financial solutions, which requires implementing open finance and open banking frameworks to drive competition and financial access, while supporting fintech solutions targeting underserved communities. We have heard also during conversation here today that there are those who are quite in remote areas, they are not reached, much as we have urgent banking, but they are not as widely available as yet to all population in the country. So we still have a long way. Another one is on enhancing consumer protection and digital literacy. So strengthen digital financial literacy programs and ensuring robust consumer protection policies to mitigate fraud and enhance trust in digital transactions. The last but not least is on ensuring cybersecurity and system resilience. So implementing strong cybersecurity frameworks and developing a financial sector resilience strategy to safeguard digital financial services. So distinguished guests, the Bank of Tanzania will closely follow up on the implementation of these resolutions to ensure that the momentum gained today in honor of Gilman Rutihinda translates into a measurable progress. However, this transition requires collective efforts. We heard also from the deliberation here, we need collaboration. So we call for collective actions, and I take this opportunity to urge every stakeholder from policymakers. We have Ministry of Finance, Bank of Tanzania, financial institutions here, to fintech innovators and private sector to play an active role in fast-tracking Tanzania's shift to a cash-lite economy. As we honor the legacy of Gilman Rutihinda, let us reaffirm our commitment to turning today's insights into tangible outcomes. The National Financial Inclusion Framework, the third National Financial Inclusion Framework, which we are currently implementing, and it has the targets up to 2028, and also the Digital Economy Strategic Framework, which runs all the way to 2034, will serve as guiding pillars, but their success depends on bold policy decisions, strong public-private partnership, and continuous innovation. Distinguished guests, once again, I express my deepest appreciation to all participants for your engagement and commitment. Together, let us build a modern, inclusive, and resilient financial system that empowers all Tanzanians, enhances economic opportunities, and fosters a sustainable growth. With these remarks, I hereby declare the 9th Gilman Rutihinda Memorial Lecture officially closed. Thank you very much, and I wish you all the best.
Please, let's keep our hands together for the Deputy Governor. Delivering vote of thanks and closing remarks is Ms. Cynthia Ponera, the chairperson of the Tanzania Fintech Association. As she's approaching the stage, please let's put our hands together for her. Another round of applause for her, please.
Thank you. It's been a privilege to be here, to stand before you and be in the presence of such great company. Ladies and gentlemen, all protocols observed, good afternoon. As we conclude, I want to take a moment to express my sincere gratitude to Bank of Tanzania, the Governor, Mr. Emmanuel Tutuba, and his team for organizing the 9th Gilman Rutihinda Memorial Lecture. This goes to show collaboration in the sense that the Bank of Tanzania, involving different stakeholders, fintechs, banks, mobile network operators, and other FSPs in the market, as well as from India and Brazil. In leaving no one behind, stakeholder engagement has always been key to ensuring that we gather market insights, we learn best practices, and in so doing, unlocking barriers and creating pivotal shift toward innovation and inclusiveness in the efforts to Cash-Lite Economy. I had a few takeaways, but I think Ms. Sauda covered most of them. But I think most that I wanted us to take away is that regulators must be closer to stakeholders to become more aware of what is happening in the market, and in so doing, we share market insights and are aligned into better regulations. With that, having said that, like a special thanks to the key speakers, Mr. Rajesh Bansal, Mr. Matheus Rauber, our moderator, who's had a very difficult job of moderating such a great panelist. Thank you, Mr. Kennedy Komba. To our panelists, Mr. Tony Misokia, Mr. Muhammad Mashaka, Mr. Firaz Ahmad, Dr. Charles Mamaja, Mr. Jesse Jackson, a big thank you to such an engagement forum. Thank you, Mama Josephine and your family, for embracing us with your presence and for basically unwavering support and dedication. Another big thanks to each one of you here for your valuable time, insights, and contributions, and all the questions that you asked to keep the panels engaged. Your dedication and engagement are key to driving innovation and progress. Our collective efforts toward a Cash-Lite economy are not just about convenience, but it's really about fostering financial inclusion, enhancing security, and paving a way for a more efficient and transparent financial ecosystem. No institution, whether public or private, can do this alone. We, as fintechs, are committed to the role of innovation. The journey ahead requires collaboration, commitment, and continuous adaptation, and I am confident that together we will achieve remarkable milestones. Once again, thank you for your participation and support, and let's continue working together towards a future where digital payments empower individuals, businesses, and economies alike. Thank you so much.
Another big round of applause to Ms. Ponera. Thank you very much, ladies and gentlemen, for your commitment and engagement to this session. As we are now at the end of the program, I would like to welcome you all for lunch. Lunch is served at the ground floor of this building. So as you go down, you will find lunch there. I understand that most of us are fasting, so you will receive a takeaway if you wish to get one for daku. Is it daku or iftar? Kwa ajili ya futari. Karibuni sana. Nashukuru.